Hi, my name is Gary Stewart, and welcome to FounderTribes' Democratizing the Warm Intro event during London Tech Week. London has come very far in terms of becoming a global hub for startups, but I think that what we can still learn from what is probably the definitive hub, by which I mean Silicon Valley, is that the key is really to have a concentrated ecosystem of entrepreneurs, investors, corporates, and universities who've all been there and done that, and are willing to pay it forward to founders to create and scale some truly magical businesses. At FounderTribes, we're trying to do the same, but through our app. We're trying to make sure that any founder anywhere in the world will have access to people like Ed Zimmerman, a New York City-based startup lawyer who has personally invested in more than 100 VC funds and 140 startups, or people like Lorenzo from Gangels, who's kind of amassed about $100 million to invest in LGBTQ founders around the world. Or Joel Burks, the head of Google for Startups USA and the co-founder of Collab Capital, a $50 million fund to invest in diverse founders, something similar to what Paula from Impact X is doing as well. Or Jamal Harani and Emma Steele, who run Syndicates of Angels that both have an awesome track record of investing in women and minorities. People as well like Sayan from Goldman Sachs, which has committed billions with a B to support and invest in diverse communities. Or Chris, Gabrielle, Grayson, and Madi, who you'll see later, who are founders from diverse backgrounds who, despite the odds, have achieved fundraising and or revenue success. And we need to celebrate all of them, because in the current world, what you look like and where you live matter way too much to determining whether you are deemed fundable, and that needs to change. And if software is meant to eat the world and democratize access to things like taxis in the case of Uber, or $1 million apartments in New York City and London in the case of Airbnb, perhaps it should also begin to focus more on disrupting the startup ecosystem itself. But before we get to the first panel, I'd like to share a short video of what we've been up to at FounderTribes, and that's especially pertinent today because we're launching version 2 of our app today. We'd love for all of you to download it and become our beta testers. So with that, Petar, please play the video. We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with the founders submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are 2 possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today. All right. So we're back. That was cool. At least I think so. So now it's my pleasure to introduce you to Anu from British Patient Capital. She's probably one of the most important women in the UK in terms of being able to access, I think, what is it, 2.5 billion pounds worth of capital that gets invested into venture capitalists. And so I can think of no one better to moderate the next panel on how to raise money from institutional investors. Anu?
Thanks so much, Gary. As Gary said, I'm Anu Adebajo. I'm with British Patient Capital, and we are a commercial subsidiary of British Business Bank, which is the UK government's development bank. And BPC itself, we're actually the largest domestic investor into venture capital funds. And we have, as Gary said, $2.5 billion to invest over 10 years. I also am a venture fellow at the Fund London, and that's part of a international community of founders and operators that invest into pre-seed companies. So with that, I'd like to introduce the panel. So if I could introduce Jewel Burke-Solomon, and she is the head of Google for Startups US and managing partner of Collab Capital. Emma Steele from Ascension Ventures, Ed Zimmerman of Venture Crush, Lorenzo Thione of Gangels, and Paula Groves from Impact X Capital. And hi, everyone. Welcome.
Hi.
Hi. Hi. I think we've lost Jules, but we'll start the intros and hope that she will. Here she is. Hi, Jules.
Hello.
Hi, Joel. Fantastic. Let's start with intros. And Joel, you're actually first. If you could introduce yourself and your firm and tell us what you do, please.
Certainly. Good morning, everyone, and good afternoon. I'm here in Atlanta, Georgia. So excited to be participating in London Tech Week and here with FounderTribes. My name is Jewel Burke-Solomon. I am head of Google for Startups in the US, and I am also managing partner at Collab Capital, where we are dedicated to investing in brilliant Black founders across the US. I'm super excited to be here this morning.
Fantastic. Thanks so much, Jewel. And I'll go to Emma next. Please introduce yourself.
Hi, everyone. Thanks for having me on the panel. I'm Emma Steele. I'm an investment director at Ascension. I've been with Ascension for 4 years now. And Ascension is a pre-seed UK investor. We have a number of fund structures, including quite a few impact funds, which is my remit. And one of the funds, for instance, is an institutional fund looking to reduce the poverty premium in the UK. So I think a lot about impact in the social sense as well.
Thanks so much, Emma. Ed, if we go to you next, please.
Sure. Ed Zimmerman, and I guess I have a couple of jobs. I'm a partner at Lowenstein Sandler, where for the last 30 years, I have represented startups and venture funds, even when that was completely irrelevant to the rest of New York City, which is where I've been for that period. I'm right now actually in Reykjavik, which is why I'm wearing a hat. It's a little cold here. I have for years been angel investing and LP investing after paying off some massive student loans from the early 90s. And my wife and I and a couple of friends formalized the LP side of that into something called First Close Partners, which we founded last year, through which we continue to invest in as LPs in venture funds run and founded by underrepresented managers. So through First Close Partners, we have invested in more than 55 venture funds in the US, Africa, Europe, LATAM, and the Middle East. And we're continuing.
Thanks, Ed. Next to you, Lorenzo.
Hi, I'm Lorenzo Tione. I am a managing partner at Gangels. Gangels is the largest venture investment syndicate in the world, and it's actually the only one that is dedicated single-handedly to supporting diversity in leadership at all levels of the venture capital ecosystem. That means supporting diverse founders and diverse teams, as well as companies that embrace diverse leadership, where we help them with talent and board diversity recruitment, as well as bringing true diversity on their cap table. We've invested in over 600 companies, having overall deployed over $300 million from our entire syndicate.
Fantastic. Thanks, Lorenzo. And then last but not least, Paula, please introduce yourself.
Hi, can you hear me?
Yes, we can.
Great, thank you. My name is Paula Groves. I'm Chief Investment Officer at ImpactX Capital. We invest in underrepresented entrepreneurs all throughout Europe. We are targeting a $100 million fund to provide capital to these entrepreneurs, and I look forward to participating in the conversation.
Fantastic. Thanks, Paula. As we get started, I think there will be some time for Q&A at the end of this. So if anyone has any questions, please do put them into the comments, into the chat, and we'll hope to get to them at the end. So I think the way to start today, I think, would be to start by framing the kind of scale of the problem. And I know in the video that we watched, the FounderTribes video, there were some of these statistics were in there. Data just shows that underrepresented founders have disproportionately less access to funding. And there was, I think, some of those figures were definitely from the Extend Ventures 2020 report. And just to kind of highlight some of them again, over the last decade, in the UK, only 0.24% of VC funding went to teams of Black entrepreneurs. If you add in other multi-ethnic communities, that goes up to 1.7% of VC funding. 68% went to all male teams. 3% went to all female teams, with the rest going to mixed teams. And I suppose the worst statistic of all for me was the 0.02% that went to Black female entrepreneurs. So we can see the data shows the scale of the problem. And be really interested for us to go into why we think that's the case. Why do underrepresented founders struggle to access to capital? What are some of the barriers that are in place that you will have come across as you've been working with founders and also with VCs and others in the ecosystem? And open for whoever wants to go first on this.
Well, I'll jump in. I think the video that we just saw also did a good job of trying to get at why this problem exists. I've been investing in underrepresented entrepreneurs since I graduated from business school in 1992. And the clear problem for me is the numbers that you just quoted today have been the same since 1992, since I've been involved in the industry. Nothing's changed. I think one big problem is getting known. Silicon Valley is a very insular community. They invest in people that they know. Venture capital is a risky business. And in order to find comfort, people find comfort, it seems, in people that either look like themselves or they went to school with, they were on the crew team with, or with somebody's bridesmaid. And if you're not in that community, if you didn't go to schools in Silicon Valley, or if you didn't go to, I think I've seen similar statistics around people who attended Ivy League institutions or elite institutions, if you didn't come from that community, it's very hard for them to get to know you or to trust you because you're so different than they are.
Yeah, I'd say I agree with that. specifically in venture capital, the entire kind of thought process of assessing an opportunity is to try and find signals that de-risk, I suppose, the early stage proposition. And if you already start with a pool of capital that is non-diverse in the way they're thinking, that you have a whole set of biases that people just aren't aware of when they're looking for those signals of comfort and de-risking. And yeah, I mean, it's a start to look at how diverse funds are, in order to try and get over, or at least be more mindful of the biases that people have naturally when you come to decision making. But also, yeah, the network element is huge. That's more of a structural issue beyond VC. But accessing VC, to be honest, anyway, is quite hard. So accessing VC when you are excluded or underrepresented is even harder. So, I think the only solution to this is improving the democratization of or the openness and transparency of access to VC in general, like make it less about network and more about open pitching.
I just want to add one thing and also amplify Paula's point, although respectfully disagree with Emma, and maybe I'll start there. When we talk about unconscious bias, we tend to trivialize the overt racism, homophobia, and misogyny that is the real reason why it is harder for people who don't look like I do, who don't present like I do, who don't love like I do, in terms of who they love. And people who look like me and who live in major sources of capital spots like London or San Francisco or New York and very few other places have explicit bias. And I think it's useful to call us on it. We created the problem, we benefit from the problem, we meaning people who look like I do. And we perpetuate the problem, and we read about it, we know the stats, so it's not implicit because we're on both constructive notice and more recently actual notice. And to Paula's point about those numbers not changing since 1992, when she and I graduated from school, I published something in 2013 in the Wall Street Journal quoting stats from 2011 that 87% of all venture investors in America were white, 89% were male, and 52% had gone to the same 10 universities, reflecting a homogeneity of background and therefore of insights and perspective. And it has been self-perpetuating because we have premised the system on warm intros and on vouching. And those two things, warm intros and vouching, are inherently racist, misogynistic, homophobic, transphobic, unless we move through the world with intentionality and develop truly differentiated networks, meaning networks of people who don't live where you do, who didn't go to the schools you attended, who are from different socioeconomic strata, and who don't look like you.
Echoing all of that, I was going to add much of what Ed was saying. I would only have to add that there's a lot of different entry points and places where change can start to occur. And there's certainly change that can come from sources of capital. That means both angel investors as well as funds and venture partnerships. But there's also a cyclical nature to venture capital where wealth is created and flows, and once it flows somewhere, it can be recycled and sort of reinvested. And so one of the things that, for example, I've been focused on and we've been focused on is not just look at diversity of teams and diversity of who's making the investments, but also diversity of actually who's writing the checks. and having access to opportunities to deploy capital in deals that have been gatekept for a long time by insular communities and groups of people means providing the opportunity for that wealth to flow into communities that are then able to redeploy it in ways that hopefully have a lot less of that explicit or implicit bias and sort of racism and other forms of othering that the very insular venture community, as it's been, has been a victim of.
I think Ed and Lorenzo and everyone have made a lot of the points that I was thinking of, but one that I wanted to add into the conversation is just the level of risk tolerance that's needed to go out and start a venture. And some of the rules of the game that say, for example, you have to quit your full-time job before you can get any investment. That is something that oftentimes holds folks from diverse communities back, because maybe they're the first in their family to have a high paying job, and maybe they're taking care of more than just themselves, and so it's a big risk for them to go out and quit their job before they have something that's surefire. And so I think one of the things that can be done is that investors start to reevaluate the rules of the game that have governed this world for so long, and have more tolerance for the ways or the reasons why folks from diverse backgrounds may have a little bit different entry point, or have a little bit different ideas of how to get started, and have some tolerance for that. So I think everything else is spot on, especially when I reiterate the point about the fact that a lot of it is structural. A lot of it has to do with the fact that there is racism still, there is sexism, there is homophobia, and those really still dictate a lot of the decisions that are made in this industry.
And can I just add to Jules' point, which is a great point. So I'm on the board and have been for years of an organization called Black Women Talk Tech, and we released a research report, which I had no involvement in the authoring and researching of, but it's great. 91% of Black female founders surveyed said they had another job. And I know that when you get your MBA, one of the things that you're taught when you study venture capital, because I've been teaching venture in the MBA program at Columbia for 17 years, one of the things that you're taught is founders have to have skin in the game. And so they need to quit their day jobs and really throw themselves in and put themselves at risk. There is a racism created wealth gap in America and elsewhere. And so a founder who is working part-time and putting their reputation on the line and putting their life into it is still putting themselves at risk, I would argue disproportionately relative to a founder whose familial affluence gives them a safety net, whose academic credentials, often paid for in full by family, gives them a safety net. And we really need to examine the rubric that we've been systemically applying for venture funding to look at why we think that Harvard or Stanford means that you are going to be more successful, why we think that someone who's working 3 jobs has less grit than someone who quit their day job and started a company in their dorm room.
Absolutely. And I think, those same dynamics, if we're talking about other diverse voices around the table in terms of who is writing the check, those same dynamics follow through into the GP level as well. If you're talking about, 2+ years fundraising, 2% GP commitment, again, that excludes, big parts of society. And so, of course, you end up with, certain types of people around the table, and then, that follows through with what we've been talking about in terms of, who then, which companies then get invested into. So I think this is all a really good point. I'd like to, and I think actually, Lorenzo, you started to mention it, and so I think this is a good opportunity for us to talk about this. I mean, the title of this panel is specifically around venture capital funding, but obviously there are lots of other types of funding available. And so it'd just be interesting to hear your thoughts about other types of capital that founders in general, underrepresented founders specifically, should consider. And also just to get a bit of a sense of the timing of those things, because I think, we're kind of told that venture capital is it and everybody goes for that. But actually there's different points in your kind of founder journey. There may be different kind of types of capital that are more relevant or are, something that's worth seeking. So I'd be interested to hear some views on that.
Yeah, I mean, I often sort of start by saying, especially in talking to entrepreneurs or anyone starting a company, that first of all, not every business is a venture type business. Venture type of investment is kind of gasoline poured on a very high velocity and high temperature fire that needs to burn bright and sort of grow very, very fast, often ahead of its own metrics. And sometimes that's the right strategy from a overall kind of business creation and market creation. Some other times it's not. But there's plenty of businesses that actually are better suited to slow and steady wins the game kind of sort of situation. I've loved seeing the innovation coming through into venture-backed businesses that actually provide funding sources for bootstrapped founders and bootstrapped type of businesses that are actually building in their growth into their revenue, finding non-dilutive, less dilutive sources of capital. Often at this time when interest rates are so low, much cheaper in a lot of different ways. And if the business is well executed and it was a good idea at the right time, that actually generates significantly more control for the founder and significantly even more wealth to be distributed across the founder and the employees of the company without it sort of flowing into sort of the kind of high risk taking sources of capital that then, because of all the dynamics of funds needing to deploy capital, needing to raise another fund, need to be deployed so fast by companies and return and either go to zero or try to hit for the multiple $billion exit. Besides the fact that venture capital is the game of put money, grow, and sell or go public or create an exit. Which may also not be the type of business that an entrepreneur wants to build, and something that generates value for its stakeholders for a long time, maybe the better suited solution there. And there's more, but I think that's a good starting of the conversation.
I mean, as a pre-seed investor, we co-invest a lot with angels and angel syndicates, and I think angel investing and angel support, I think, is underrated. Sometimes it's you may want to go with the J-curve growth plan, but you may not know how long it's going to take you. You may need a few iterations, and I think angel investing gives you that time to be able to figure that stuff out before you decide, if you decide to go for high growth sort of VC capital, which has a lot more pressures attached to it, and they come with emotional investment networks, value add, that can obviously VCs come with it as well, but they give you time and they give you their emotional investments from day one. So I think it's worth exploring that world as well.
I'll add a few ideas here. I talk to founders a lot, and I always tell them my favorite type of investment is the investment that comes from your customers. And so kind of moving them in the direction to focus on sales and getting customer revenue is something that I always like to do. And I find that people are often distracted from actually going to get customers because they are attempting to fundraise and finding no success on the fundraise trail, but actually could just go sell the thing that they are building. So that's one thing. Another is research grants. So in the US, we have SBIR and STTR grants. I'm not sure what the equivalent is in London, but I'm sure that there are research-driven grants available for early-stage companies, and that is typically non-dilutive and allows the company to have some runway to actually do the research component of whatever it is they're building, and that's a great source of capital. And then you have corporations, and I'll give a little plug here for the work that I do at Google. We've been really intentional about getting non-dilutive funding out for Black founders across the globe. So we launched the Black Founders Fund last year in the US, and it's since been launched in the UK, in Brazil, and in Africa. And so that is, up to $100,000 in non-dilutive cash awards, plus cloud credits, plus ad grants, and that's available for Black founders. And actually this week in the US, we just launched the Latino Founders Fund as well. So we're expanding that work so that there is more capital available in the market, that it's not taking equity. And really, we think of that as kind of what has to happen in order to level the playing field, in order to make more capital available so folks can take those first steps and can quit their job and focus full time on the business before they go out to raise their first institutional round of funding. So those are just a few ideas, but the other piece is, I think, to Lorenzo's point, I believe there are more funds that are contemplating the idea that, and this is what we're doing at Collab Capital, contemplating the idea that there are multiple pathways to success, and it doesn't have to be the all or nothing, sort of the typical venture game where it's you win or you lose, and a win is considered only $1 billion outcome. What we suggest is that there's a lot of room in the middle, and we built a model where we can actually help founders go follow the path that actually is best for their business, instead of trying to, if they're not a multi-billion-dollar business, instead of trying to go for that, they can actually, have a great outcome in the $10 to $100 million range. And so we've built this unique sort of hybrid model between venture and a profit share, where we can help companies actually get to the outcome that's best for them based on what the market says and based on what they're building.
I just want to underscore or amplify Jewel here, because I've personally invested in more than 150 venture funds as an LP, and through First Close we've done, as I said, 55 plus, including Jewel's fund, Collab, and we've also committed to Paula's fund, Impact X, and we're super excited about both of those funds. When Jewel first shared with me the model, I started to scratch my head because it doesn't really look like most other venture funds. And that is part of the concept that if you keep asking the same people the same damn question, they're going to give you the same answer. If you start asking extraordinary people who are not the same people, they will rephrase your question and give you a different answer. And Jewel was kind and patient enough. I know you're new at British Patient Capital. Jewel was Atlanta Patient Capital, to walk me through and explain why it was structured differently. Because I happened to be a board member at an HBCU, a historically Black college university actually in Nashville, I have heard the stories of where our alums have derived wealth over the years. And Jewel's explanation of the kinds of businesses that she was also going to be including in her fund resonated with me because of my understanding of how the alums that have really succeeded financially have succeeded in businesses that are outside of the kinds of businesses the people I went to school with ended up starting. So that's to me, it was a really nice example of how someone super smart and creative was innovating in the deploying and sourcing of capital itself, rather than just by virtue of the companies that Jewel and her co-founders are supporting.
Can I also add, first of all, agreeing with everybody so much with what's been said, but there is also an interesting shift that I've certainly seen. First, it happened sort of all of a sudden in terms of a possibility, and now it starts to actually shift a little bit in the way it's been looked at, which is equity crowdfunding. And there is For entrepreneurs and for founders, there's obviously been now for, I think, close to a decade, a set of opportunities to raise capital from a large number of non-accredited or less accredited investors in various different ways. But initially, it was always there was always this kind of almost like a black mark on a company. You could see it in the venture community of companies that actually went that route. And often great companies would stay away from sort of equity crowdfunding because of the fear of having been seen as having resorted to something that determined, the fact that they couldn't raise capital in any other way. And I think that a little with the tide shifting, a little with some examples, and a lot with smart people kind of thinking through this, they realize that much like what Jewel was saying, I love to see your customers invest. Yes, they can certainly invest with sales. Those are fantastic. But sometimes, venture type of businesses need to put the capital in motion before they have anything to sell. And what they have to sell is effectively the vision and the promise for a future return. And when there is an intrinsic sort of match between a type of business and a community of an audience and a community of potential backers who will turn into customers, who will turn into ambassadors, that actually can be a huge boost for a company. And going the equity crowdfunding route can actually be a really smart thing to do for the business. And I'm now seeing it with companies that are very much able to raise venture capital traditionally to add, not just because they need a little bit extra capital, and that always helps, but because they are building this group of ambassadors who have stakes into the business and in its success, and that propels them to their growth.
We actually see this as a positive signal, especially for anything that's sort of B2B2C, B2C, where it's a really clever marketing strategy. So yeah, we're very happy to sort of lead the round on the terms, but the entire marketing of the deal is kind of presented as a crowdfunding opportunity because it's in the best interest of the brand in the end.
I love that idea. I talk with a lot of different entrepreneurs that have a vision and they feel like they've identified a problem and they feel like they're going to build the perfect solution. And it's hard to know sometimes. I'm not a rocket scientist. I'm only as smart as the entrepreneurs I'm working with. And so I always like to tell them, how do I know that somebody's going to buy this product besides your mother, right? And equity crowdfunding is a wonderful way to validate that there is a customer demand and that they are willing to pay.
Yeah, absolutely. And I think at the Fund London, we invested in a company that also did a crowdfunding as part of that same round with some other VC investors, called Black Ballad, which is a kind of media and data company that specifically is for Black women. And that's exactly what they did. They had this community of Black women who were really invested and who, really love the company, and they were able to raise there in a way that I think it was very challenging for them in other senses, because having a company that's very specifically targeting the Black female community is not something that most VCs in the UK are familiar with or are even interested in. So, I think it's absolutely a really kind of good and practical and possible way for underrepresented founders to raise, especially those that have that kind of community that is really invested in them. It's a really good point.
One thing to just note on the equity crowdfunding, and I'm obviously also a lawyer. It has been something that enables people to sidestep some of the systemic barriers to closing the wealth gap. In the US, for the most part, unless you are an accredited investor, meaning you have hundreds of thousands of dollars in annual revenue personally, or that you have $1 million or more in assets personally, you can't invest. And so a lot of the wealth creation that you might that people can get through angel investing goes away or is precluded for folks who are under those paternalistically set by the government arbitrary thresholds. With crowdfunding, you're also seeing equity crowdfunding. You're also seeing an opportunity to participate in the upside, an opportunity to support. We, as a law firm at Lowenstein, were proud, for instance, to have represented Arlen Hamilton and Backstage Capital, a longtime client and a fund I'm invested in the equity crowdfunding they did through Republic, which was kind of an historic deal. And the excitement that that generated also was validation of the strong sentiment, because one of the things that we don't often talk about is the depth of brand loyalty, right? We talk about the number of people, but there are some brands that just generate, and I'm not necessarily a fan of Harley Davidson, but when human beings are tattooing your brand on their body, that demonstrates the depth of the brand loyalty.
Absolutely, absolutely. And I think we've started talking a little bit about the US and the UK and some of the things that are happening there. Julie, you mentioned things you're doing at Google for Startups are doing across those geographies. And I think it would be great to discuss a bit more about some of those opportunities and the differences that you see in the two geographies. And I know many of you here have invested and are involved in both, so it'd be great for you to give your views on that. Should I go to someone first? Paula, do you want to kick off? Oh, you're still muted.
Okay, sorry about that. Sure. I think that the comparison of the London market versus the Silicon Valley market, or the European market versus the Silicon market, is always a fun conversation to have. I would say that that the London market is a little bit younger than the Silicon Valley market in terms of its stage and maturation, which for me is what makes London a little bit more exciting, because the younger the market is, the more opportunity there is for growth, right? I looked at some numbers that looked at Silicon Valley, which some people say was really launched in 1942, with some government funding as well as some funding out of some research projects in Silicon Valley. And over that time, if you look at some of the most successful funds, they've generated, like, I think, a 20x return over, a 40-year period. I mean, the numbers are astounding if you got in early, right? And there are individual investments that have also generated successful returns, but the market as a whole, I think it benefited from its early start in the 1940s. Well, I believe that London is a little bit earlier on that spectrum. And I think that this London market also has the opportunity to generate a 20x return over time, in terms of the market as a whole. The other thing I think about a little bit, where you sort of started the conversation, Anu, is there is a established infrastructure in Silicon Valley, combined, if you listen to Gary's video, combined with venture capitals, universities, research institutions, and the entrepreneurs itself. And so there is an established ecosystem, which we all have talked about, the biases that exist. And so if we can replicate that sort of ecosystem in London in a more open and transparent fashion, I think it would be huge in terms of being able to advance entrepreneurship and generate outsized returns for investors.
I'll just add one thing, which is, of all the terrible things that have come from the last 2 years of global pandemic, one that might have just been, the sort of instrumental to a complete change of how things are, is the disconnection of geographic location and capital moving. I couldn't tell you, of the many startups that we've funded in the course of the last 18 months, I couldn't tell you most of them where they were when they were pitching, like the fact that entrepreneurs are able, in a few sort of round of interviews and talks, to meet with investors all over the world without having to travel, and actually successfully raise money, because the social barriers, they were all like, the technology actually has existed for much longer than the last 18 months, but the social constructs and barriers that were like, oh no, you have to come to my office on Sand Hill Road or whatever it is, the fact that those were gone has been an enormous equalizer of some level of some aspects of inequity that existed because of geographic location.
Yeah, I want to, plus one to that idea. It's something that's actually informing my partners and I as we're thinking about our next fund. We, for this first fund, are strictly focused on US, but we've gotten so many great companies to come to us from all over the world, and Black founders in particular, who are looking for funding. We're already having conversations about, how do we adjust the remit for the fund, for the next fund, to be able to write checks into companies that are, in the UK or in Africa, because we see that there's just so much opportunity, and still there is this disparity that exists for Black founders who are raising everywhere. And so we want to be able to address that as well. And so it's to your point, it's something where the globalization and the ability for folks to raise money wherever they are is something that, is definitely, the pandemic has shed more light on, at least for me and for my partners.
So on the LP front, it's been fascinating. I've been coming to Europe and hosting events for our Venture Crush platform for years, and I've been personally investing here for years and doing deals as counsel, representing European funds and startups. And US LPs have been allergic, and not just allergic, like allergic with an anaphylactic reaction to European venture funds, with maybe one or two exceptions. And we're now seeing companies like Hopin, and you have a fund like North Zone, which invested early in Hopin, or UiPath and Credo Ventures in Prague, which, I don't know if that fund one is going to be a 20x return on the entire fund, just because of UiPath, though they also have other great companies in the portfolio. Blossom Capital, Ophelia Brown's fund in London. You're seeing these amazing outcomes. Seed Camp is another one, where US LPs, I hope, will look and say, I don't know why we have missed out. And the same is certainly true of the companies themselves. And we also see, even within Europe, obviously there are British funds that will say, we cover Europe, but Lord no, we won't do a deal in France because it's too complicated. And so we've been seeing some shifts in those areas, and there's certainly a similar geographic set of biases in the States, and deal terms are different, and valuations are different, and exit opportunities are different in some of those different geographies. The fact that there are so many angel investors clustered around geographies is really helpful for the folks who start companies in those geographies, and that's another one of the dividends of the silver linings of the pandemic, is it has been a little more of an equalizer. Although I still see among American investors at the LP and venture capital level, they will say, there's so much opportunity here, why do I need to look across the Atlantic?
Yeah, absolutely. No, all very good points there. So we want this panel to be obviously very practical as well for any of the founders that are watching this. And so it'd be great if you could all, I'll take you around in order, just let founders know how they can access capital, either through your firm or through firms you work with. What are the opportunities available to them with the firms that you're with? So I'm going to take a reverse order from the intro that I did. So I'm going to start with you, Paula.
Sure. We're easy to find. Our website is www.impactxcapital.com. That's impactxcapital.com. You can go to our website and there's a client intake form where you can enter information about your business plan, and it asks a series of questions so that we can get a sense of the business that you're trying to build. And then once you've completed that form, you will receive an invitation to schedule a meeting to talk with our Chief Technology Officer is H.E. Britton, and those are the first steps towards getting together with ImpactX Capital. And I want to just say one thing. We've worked really hard to democratize capital so anyone can access the form, anyone can fill out the form, and anyone can go and basically provide a written pitch for their business.
Fantastic. Thanks so much, Paula. Lorenzo, I'll go to you next.
Yeah. So we're also really easy to find. The website is gainjules.com. People can write to me directly. My email is lorenzo@gainjules.com. I'm super accessible on Twitter and on LinkedIn. We always talk to founders at all stages. So we'll invest even very, very early, even though a lot of our investments also are into later stages of growth. And we also encourage anyone who maybe is already started a business or thinking about starting a business to join our community. You don't have to be an investor or desiring to be an investor to access things like educational opportunities and networking opportunities with our entire Gainjules community. And they can do that directly from gainjules.com/join.
Great. Thanks, Lorenzo. Ed, you next, please.
Yeah, I just want to start by also commending Lorenzo, because he's done so much to facilitate funding and community for the LGBTQ founder and investor community, and has gone almost an hour without mentioning that he also co-founded Start Out, which is a fantastic organization that we have for years supported, through which founders and investors who are LGBTQ or who want to really support the LGBTQ community can get together, can do pitch competitions, and just, if you think about someone who has had such a varied and successful career, and he also has these artistic endeavors on Broadway and elsewhere, Lorenzo is someone that I admire tremendously and have had the pleasure of knowing for years, and of spending time at the White House with. So he's very humble, but I would encourage people to seek out Lorenzo and to look at the body of work that he's done as a successful serial founder with exits as well. So I just wanted to throw that out there, because
well, thank you, Ed. The love fest is mutual.
So from where we sit, for first close partners, we direct people to an intake form on our website so that we can get information before making a decision about whether to look at the venture fund. And we do that. I know it sounds impersonal. Part of why we're doing that is we're done with warm intros. We're not preclusive of warm intros. We do not want to prioritize them over cold outreach. So to get the same data from everyone that enables us to start the process and create a queue has been something that's important to us from an equalizing things perspective. And like Lorenzo, I am very accessible on Twitter. And my email is on the Lowenstein Sandler website as well. And because we do our Venture Crush events, we're happy to include people in those events. And if folks want to be included, they can just shoot me an email, ezimmerman@lowenstein.com, or DM me on Twitter. And then finally, I would really encourage people to consider the funds that we have backed through First Close Partners. All of those funds have GPs who, by both headcount and economics, are 50% or more underrepresented. That's our mandate. So, and it's global. So you can take a look at the list of funds, or folks can shoot me an email and I'll send them the list of funds and go directly to those funds, and you will see Jules' fund and Paula's fund on there as well.
Great, thanks, Ed. I'll go to you next, Emma.
Yeah, so same thing. Our website is quite simple to access. It's ascension.vc, and then I respond to all LinkedIn messages as well. Just simply a small summary of the opportunity and maybe a summary pitch deck, and I always respond. My personal interests and the funds I managed are social impact funds. So if it's impact, I'm the one who would probably look at it. Otherwise, I would be passed on to one of my colleagues on the generic tax efficient funds. But last year during the pandemic, actually, we created an online pitching competition in partnerships with other VCs called the Debut Sessions, and it's got its own website. It's debutsessions.co.uk, and it's a completely online pitching competitions that the applications are open right now, actually, and it's completely transparent. All other investors can actually look at the deal flow coming in. It's open source, and during the day there's a whole load of sort of masterclasses and content that is then saved on the website and accessible for all to see. Things like raising funds, writing a pitch deck, term sheet negotiation, that kind of thing. And there's a new ASA sort of structure that we developed for retail investors with a minimum ticket of 2K to get in on the deals that win in those competitions.
Great, thanks, Emma. And lastly to you, Jewel.
Yes. So for those who are interested in Google for Startups, please follow us on social media, Google Startups. And specifically, we have a channel for UK, Google Startup UK. I want to give a shout out to my colleague who runs our UK office, Marta Krupinska, and another colleague, Rachel Palmer, who have been doing great work on the Black Founders Fund in the UK. So they would be really good resources for those of you who are joining from London. And also on the Collab Capital side, you can find us. Collab.capital is the website. We also have an open form for people to apply for consideration for funding. And I am at Jewel Melanie on social channels and pretty active, mostly on Twitter. Not so great on LinkedIn, but I am pretty active on Twitter.
Fantastic. Thanks, Joel. And for my part, with the fund, if you are a pre-seed founder and you're raising a pre-seed round, you can email me at anu@thefund.vc. I'm particularly interested in underrepresented founders. And then on the LP side, if you are raising a fund and you are interested in talking to us about that, the website is britishpatientcapital.co.uk, and there are kind of all the details about what we look for and the kind of email address for the proposals inbox. Everything goes into that inbox, everything gets responded to. And then I think the last thing I would also say is, if you are someone who is thinking about a kind of novel way of tackling some of these issues that we've talked about today, to get in touch with British Business Bank more widely, especially the strategy team. And again, that can be done through the British Business Bank website, british-business-bank.co.uk. Very interesting web address there. But that is another really good way of helping us to think about the kind of supply of capital that's needed, not just the demand, and kind of and thinking about new ways of approaching the market there. So please do get in touch if you have any innovative ideas about how some of these things that we've talked about can be tackled. So with that, I'm just going to say a big thank you to all of the panel. We are just over the time that we were supposed to go to. I don't know if there are any questions. If there are, then maybe Gary, you can, if there's any burning questions, you can field them to us. But if not, then we'll end that there. So thank you so much to the panelists, and thank you to everybody for watching this.
We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with a founder submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are two possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today.
Hello and welcome everyone. Good afternoon. Hello and welcome everyone. Good afternoon to the afternoon session of FounderTribes panel on angel investing. namely how to get that raised, the first £250,000 from angel investors. My name is Rico Roberts, and I'm the head of IR here with FounderTribes and also an angel investor. And today we're very fortunate to be joined with Jabal Harani of Velocity Capital, and Marie Headley of Workforce Buddy, Patricia Hamzahi of the Black Funding Network and a philanthropist, Rustin Brown of Manette, Phelps and Phillips, and impact investor James Broderick. Before we begin, I want to thank you all again for taking the time to chat with us. And I'd love if we could just have a brief introduction about yourself and how you became involved in angel investing. So why don't we start first with Anne-Marie.
Okay, good afternoon and good morning, everybody. So my name's Anne-Marie Headley. I am a people consultant at Google. I'm also the founder of Workforce Buddy, which is a people consultancy that's set up to support specifically startup and scale-up organizations. I'm quite new to the angel world. I started investing about 2 years ago. FounderTribes was my first investment actually, and now I have 3. So that's how I got involved.
Great. And Patricia? And Patricia,
am I not on mute? Am I on mute? No.
No.
No, you can hear me. Go ahead. Sorry. I wear many hats. It says on the screen that I can see Integrity Capital, but I'm also a co-founder of Extend Ventures, which some of you in the audience probably know has done some extensive research into the diversity of funding available, the access to funding available to diverse founders. But I'm also here specifically because I am an angel investor in addition to Founders Tribe. I'm also an LP in Impact X, and I also have do invest in, particularly in the social impact arena, where I work with up-and-coming young social entrepreneurs who are trying to get their ventures off the ground. And yeah, I'm very delighted to be here. Thank you.
Great. And Rustin, if you could give a brief introduction about yourself. I think you're on mute.
Sorry, I was mute. Can you hear me now?
Yeah. Yes, thank you.
Rustin Brown, partner from Manette, Phelps and Phillips in Washington, D.C. I focus on emerging companies and venture capital. I am also an angel investor. I made my first angel investment last year around July. I invested in my roommate from college. His mother is Joe Mangano, who is a famous HSN celebrity, who was coming out with a line of products to help combat COVID. And so I made investments in that. And then since then, me and my wife have made a number of investments, many in the impact space. We use a network called Halcyon based out of DC as well. That's kind of our primary filter of angel investments.
Wonderful. And James, if you could also give a brief introduction to yourself. Or Jamie, excuse me.
Hi, Rico. Hi, everybody. I'm Jamie Broderick, and I'm a board member at the Impact Investing Institute. My background is in wealth management and asset management. So I was CEO of JP Morgan Asset Management Europe, and then CEO of UBS Wealth Management UK. I basically got into angel investing when I left the financial services sector. So when I left the financial institution, the compliance shackles came off, and I discovered this fantastic world. It's so much more interesting than public markets. It's an opportunity to be part of startups without it consuming your entire life the way it consumes a founder's entire life. So I could never start a company, but it's kind of a vicarious experience, a more diversified experience of the excitement of people solving the world's problems. So I've been at it since I retired from financial services, so a couple of years, and that includes FounderTribes.
Wonderful. And finally, Jamal, we'd love to hear your introduction and background.
Yes, sure. So my name's Jamal. Thank you, Rico, and hello, everyone. So I'm an entrepreneur, having built several businesses in the past, some super successful, some failures. So I've got the T-shirt and the scars to show for it. And I head up, I'm one of the partners at Velocity. We're a venture capitalist. We invest in companies from 150,000 all the way up to 10 million. whether it's seed finance all the way through to Series A, Series B. And as part of that, we also invest in all of the underlying companies ourselves personally. So as an angel investor, it's great. I have skin in the game. What's exciting is that Velocity invests in companies. We look at the management team and the idea. And what's happened is that out of all our 45 companies, over 50% of our founders are either female or underrepresented. So which we're, not by choice, but because we look for great ideas and the people around it and not what school they went to. And that's what we do. And FounderTribes is one of our great companies that we've invested in.
Wonderful. And to that point, I think an interesting difference between institutional capital and angel investing is that, to Jamal's point, the skin in the game is your personal capital. You have a personal stake. My wife and I, we always think about that before we make an angel investment. And to that end, what are some of the criteria that you look at when you're considering an angel or a startup opportunity? And also, how do you assess the potential of the founding team? Jamal, I'd love to start with you with regard to that.
Sure. Well, I think first and foremost, you've got to like the people that you want to work with, and also where you can actually help. There's no point someone from a bioengineering company contacting me and looking at investment because I haven't got a clue. But when you talk about consumer products, or products I can really relate to, you want to get involved. So the first thing is that we look at the people and can we actually add value? Because the part of angel investing that's important is having a right fit. It's not about the money, it's about the smart capital. And at an early stage, you need angel investors who are going to actually help you open some doors, help you get your first customer, all of those kind of things that really help you grow your business. And then, so that's the first thing we look at is the people, and can we work with them, and is their idea any good, and can we add value? And then the rest of the journey then begins.
Awesome. And Patricia, what are your thoughts on that?
Yes, I totally agree with Jamal in terms of the things to look for in terms of the individuals leading the business and sort of the strategy they have behind their business. But I personally look beyond that, because those are just investment fundamentals, and hopefully we can all sign up to that. But I particularly look at investing in organizations, companies that are able to make some wider impact, would have a wider impact. That's how I look at it. So that's why I did invest in FounderTribe specifically, because the whole premise was I could invest in a great company that is going to sort of be a good business and and be led by a underrepresented founder. But something like FounderTribe or ImpactX as well are making a kind of infrastructure systemic impact. And for me, if I'm going to invest my capital, that's where I see the value that I can bring. That again, I can just be a stock picker and just invest that way, or I can sort of say, can my capital have greater intention and greater impact? And that's the criteria I place around the investments that I make, especially because we know that kind of angel investment that we would be doing, while there's not a huge amount of capital going into these businesses, right? If you don't have access to friends and family, if you don't have access, and you certainly don't have access to institutional capital, the angel investment community is really, the angel investor community is really probably one of your only real source of startup capital. So that's my thinking. Thank you.
Wonderful. And Jamie, coming from the institutional side to angel investment, how do you look at companies, and does the criteria change?
Well, first of all, I start with a series of circles that represent my interests, and then they intersect in a Venn diagram. And I think that's quite idiosyncratic, and I think possibly unlike some of the institutional approaches. So I'm interested in underrepresented founders, gender, finance, impact investing, and then for various reasons, West Africa and Egypt, and then the UK. So basically what that means is if you're a Black woman setting up an inclusive finance proposition in Ghana through a UK holding company, I'd be putty in your hands. So I think part of the whole thing is, what are the things that specifically interest you, and that can be quite idiosyncratic with an angel investor. I think unlike institutional investors who tend to be a lot more organized about it. But just moving beyond that, I think some of the things that you're looking for is, yes, you look at the people, but you're also looking at, you have to realize that there's a very good chance that this startup will pivot. It will learn enough to do something different. So you have to invest not just in the idea, but in the people. When you look at the people, are these founders ready to pivot if circumstances require? And so that's one of the questions. It's great. I mean, obviously you're looking for somebody who is solving a problem that you care about. Absolutely. But it's very possible that they'll pivot on the way there. And what that means is you have to be able to feel comfortable that your founder team is going to have the ability to pivot and aren't just obsessively focused on a single outcome. I think that's one of the big things for me. The other, I'll leave it at that.
Okay, wonderful. And Anne-Marie, what are your thoughts with regard to the criteria that you look at when considering a startup opportunity or angel opportunity, and how do you assess the founding team?
Yeah, sure. So I tend to be personally drawn to companies that are either trying to solve a real world problem or that have a business idea that's going to help people lead more healthier or happier lives. And in terms of the founding team, I think there's a number of different areas to. I think one is previous experience and track record. So, have they been involved in building something in the past, not necessarily a startup, but what's their track record in building and being part of an operation. I also think kind of domain expertise. So what's their knowledge of this particular sector? How well do they understand the problem that they're aiming to solve for? And then I think there's also something around support system in particular, what's the caliber of their advisory board, and also from a skills perspective, what skills do they have in this area? Personally, I'm very much drawn to, their aspirations for the business, whether or not they're in it for the long term, and also what their values are. So does this make for a good relationship, a good long-term relationship?
Wonderful. And Rustin, we'd love to hear your thoughts as well in terms of how you analyze the criteria you use for investing in startups, and also how do you look at the founding team?
Yeah, for me, one, I like to see founders who've been validated by organizations. So as I mentioned, the Halcyon House in DC. There's other kind of Techstars and things of that nature that show that somebody has gotten a little bit of a track record. I think that's helpful, particularly when you're making early stage investing. Is making sure that people who have done some of the early low hanging fruit of pitching to a competition, whether it be local or on a national scale like Techstars or Y Combinator, but something that shows that they've done more than just come up with an idea, that they're doing some of the groundwork to come up with a revenue model and a plan for how they're going to grow and scale in the future.
Wonderful, wonderful. And one of the interesting things, what attracted me to FounderTribes was that they are really disrupting the startup and VC ecosystem in a way that hasn't been seen before, and combining technology, Tinder for founders, and to that end, what advice would you give to underrepresented entrepreneurs seeking angel funding? So if an angel investor came to you and said, "Hey, I have this great idea. I know nothing about raising capital. I know nothing about fundraising. What advice would you give to them?" And why don't we start with you, Anne-Marie?
Yeah, I guess one of the important things for investors is like what's the growth potential for the business idea, and how likely is it that they're going to get a return on that investment. So I think it's important to have that top of mind if you're pitching an idea, to think about what's in it for the potential investors as well. In terms of advice, I think for underrepresented founders, I would always say yourself. You still there? So that your leadership is growing complexity. Am I back now?
Yes.
Can you hear me?
Yes.
Okay.
Can you hear us?
And so the other thing, yes, I can hear you now. That's perfect. So yeah, the other thing I always say is work on yourself as well as the business, so that your leadership is growing alongside the complexity of the business. And if you're a leader for the first time, I think it's always great to try and get a commitment from your stakeholders in an investment in your ongoing leadership development as well.
Wonderful. And Jamal, what are some of the advice that you've given to underrepresented entrepreneurs as they seek angel funding?
Okay, I'm an underrepresented fund manager. You don't see many of us around. So
yes,
but what I did and what we focused on was making sure we get our proposition right, and we're very clear on what our proposition is. And then investors invest. We have over 600 investors in our fund, and of all colors, all shapes and sizes. So what I always say to founders, and particularly underrepresented founders, is first of all, know your product, know your market, do your research, because sometimes, if you've got to become the expert and really have conviction on why you believe that you are there changing the world, why are you going to have an impact with your product, why is it going to disrupt? So have complete conviction and really understand the market, and then do your research before you speak to an angel. Understand what they're interested in. Most of them will have a LinkedIn profile. Most of them they've been successful, will have done something. They'll have stuff on Google, whatever the stuff is. Just, do your research so that you understand what they're interested in. And then when you go and see them, you've got the ability to develop that relationship, know what their hot buttons are, and then pitch your proposition, knowing your proposition inside out, so you can demonstrate what the opportunity is. Don't let the fact, and I know, we invested in FounderTribes, I know what the stats are, but don't let that stop you, because it then becomes a numbers game, because the world is waking up, that there's a lot of talent out there, and that people are not looking at. So, it is an opportunistic market, but know your product, know your people that you're going to pitch to, so that you can bowl them over when you actually talk to them.
Wonderful. And Rustin, what are some of what advice would you give to underrepresented entrepreneurs as they seek maybe their first time raise?
Yeah, no, that's primarily who I work with in my emerging company work at Manat. And a lot of times it's an education on what venture means long term, right? And understanding the difference between angels and where they might want to go, which is getting to the VCs or getting the exits. And so letting them know it's a process, and that that they should focus on things that are not the slick pitch deck. I have a lot of people who come to me and say, review my pitch deck. And I say, I don't even care what your pitch deck says, because if you don't have a product that's scalable, or you don't have an idea of how to run a business, it doesn't matter what your pitch deck says or how pretty it is, because people are going to see right through that. And so what I work with founders on is really making sure that they have they're tight from the fundamentals. Particularly for underrepresented founders, it's a lot more difficult because they often haven't gone to the places like Stanford and Harvard that actually teach you the process of going through this. Like, that's part of the curriculum, and that's why those schools have such great success in the VC market, because it's literally part of what they're taught. They're taught the blueprint and the game plan. So with underrepresented founders who probably haven't gone to those schools in most instances, you have to go back and say, okay, here's the playbook that those schools use, and here's what you need to do in order to catch up, because you're probably not quite there yet, but you can get there.
Yes, and Patricia, given your perspective, what do you say to underrepresented entrepreneurs who are seeking angel investing?
I might start a little bit earlier than where the others have spoken, and maybe sort of go back to some of what Rustin was saying. So in working, it's pre-seed, right? Early stage, these are people just starting out. And and yes, they probably haven't gone to the Ivy League or the Oxford, universities, and they come from backgrounds to support them. So they don't have the word that we can all use, the networks, to allow them access to angels that other founders have naturally because of those universities and family ties, etc. So that is my advice in a way, right? Yes, have your pitch down. Absolutely, know it word for word and be able to tell it with passion and excitement. But I would say at the early stages, invest in entering as many networks that you can find where you can tell your story. Because once you start telling your story, you will find people who will then be interested in what you're trying to do. But if you are not able to be in a room where you can tell your story, that's where you're missing out. And I know networking sounds exhausting, and and even just finding those entrees can be difficult. But start with the people that you know. Do start with them in the family. Start with your uncle, your aunt, or some other people within your circle. If you went to a local college, start there. Just start with a professor that could have helped you. Just find the avenues, and also and really finding Black and underrepresented founders, reach out to the ones that you see that you have for just advice, support, pointing you in a direction to a group and an organization that can benefit you. I would just assiduously, that's what I would do. That's where I would spend a lot of my early time, is trying to find those networks and get into those networks, because I think that's where you're going to have the most return on your time and effort.
Yeah, I would say definitely VC and angel investing is a networking business, and it should be, you should always be in the process of networking as you go. Jamie, what are your thoughts on that with regard to perspective that you might give underrepresented entrepreneurs seeking angel funding?
Rico, I just completely agree with Patricia and also what Rustin was saying, because the nut to crack is connectivity. We've called it networking. It's all about connectivity. And if the conventional existing form of connectivity, traditional networking through old school ties and people from the country club and all the stuff that underrepresented founders often don't have access to, then I think we still have to crack the code of connectivity. And that's why I like FounderTribes. I think FounderTribes is a good way of creating connectivity using a 21st century method rather than a 19th century method, which is who you went shooting and riding with and fox hunting with. I think it just takes us into the 21st century, but the basic concept is still all about connectivity. And so FounderTribes allows you to kind of strip away, as you do today in LinkedIn and everything else, where you can now connect much more frequently, but it's fundamentally about connectivity. And so to come back to my Venn diagram and my little circles, I think you have to, as a founder, you have to find a way, as Patricia says, to create a network that's relevant to what you're doing. So if you're in health tech, you do need to find an entry point, I think is the term Patricia used, an entry point into health tech. If you're trying to appeal to Black angel networks, then you need to find contacts there. And I think it's maybe a harder problem for underrepresented founders, but I think you still need to crack the code of connectivity. And you can call it, 21st century networking or call it what you want, but I think that's really what the essence is.
Yeah, I think and that's the beauty of FounderTribes. It allows for many of us, if we didn't go to an Ivy League or an Oxford caliber school, to connect with other entrepreneurs and other investors and other mentors, and kind of FounderTribes allows us to even the playing field. One of the things that I've noticed on LinkedIn is that sometimes I'll get inquiries from people that I don't even know how they reached out to me, but they'll talk about they need funding, they have this wonderful idea. Please talk, if we connect and talk. And so I was wondering, with regard to that, when is a good time for founders to start thinking about raising or to start thinking about investing? Like, when should they even approach what should the mindset of a would-be founder or underrepresented founder be when it comes to thinking about raising? Like, when's a good time to start thinking about it? Do they need to have an MVP at a minimum before they start thinking about it, or a really disruptive idea? Jamal, I'd love to get your perspective on that.
Okay, I think it's important to have a business plan or an idea and research through in terms of what your proposition is. And then it's really, there are lots of funds and grants available, startup loans that are available in the UK. Explore those, because even your local authority will have grants available for you. So use that opportunity to access some capital and grants to start building a wireframe or an MVP of your product, or to do some additional research, so you can back up your idea and your disruptive idea with what is out there, and then start speaking to experts in the field or people that have been in that type of industry to look at at that point you start looking at angel investment. And also look at, in the UK, you've got a fantastic scheme called the SEIS investment scheme, which enables investors to receive 50% refund via the income tax bracket. So, a lot of investors invest through the SEIS, which is high risk, high reward, and early stage. So there are a lot of SEIS funds that invest in startups an idea. I came to Velocity as an entrepreneur with an idea and a disruptive idea with a co-founder, and Velocity made their first investment from the SEIS fund and I'm telling you, having looked at some of the decks I see nowadays, mine was pretty shoddy. And it just about got over as a PowerPoint presentation. But they invested in us and the idea. And that was just on a PowerPoint presentation when we gained £150,000 worth of SEIS investment to start the business journey and that founder journey on that product. So there are a lot of SEIS funds. So, you can access it even on a good business idea that you've done good research and say, look, this is our idea, and the funds will invest that. So grants, and then look at the tax efficient investment opportunities that are there.
Wonderful. And Patricia, we'd love to hear your perspective on, when's a good time for founders to start thinking about raising?
Yeah. So I think that it depends on sort of where you are in your sort of business development journey, in the sense that I think angel investment can be early. And while Jamal has identified sort of grants and local authority, the problem with that, to be honest, is that many of the founders I talk to, and I've been doing some focus group with particularly Black founders, and a lot of insights come from that bit of research effort, that they don't know where to go for some of that. They don't have a roadmap. That those opportunities are not easily accessible to many of the founders that we've been talking to. And so, in a way, I would say an angel like Jamal or like Jamie or Resident or Anne-Marie or myself, if we are supporting a business, we can help them navigate and find those resources, because otherwise it's quite difficult for them, and they will miss those opportunities. So I would say start early. Again, family and friends. Your uncle might become your angel, because it's not a gift that they're giving you. They're not just going to give you cash because you're the nephew or niece. You're making an investment proposition, but try to find sources of support that are close to you, and then build out from there. And I would do that at an early stage when you have your business plan, your business proposition, down. And I think that's important, because people need to see that you have the confidence behind your idea, behind your initiative. So that's what they want to see primarily. So once you have that ready, I would go early to look for angel investments. But again, try to start as close to home as you can. Again, local authorities are an interesting source, because lots of times they have local business associations, the equivalent of an LEP or sort of local business hubs. Go there, and, as a young or as a startup venture, go along to one of those groups, and then you will find a network already that you can leverage off of. So I would say start as early as you can. Once your business proposition is ready, it has been tested.
Yeah, and I think it's being able to test your pitch on friends and family is a wonderful way to perfect your your craft, perfect your pitch deck, and you have a very I don't want to say easy audience, but a very generous and willing audience who will sit through your pitch, and more often than not they tend to be very supportive. So that's a wonderful way to start with friends and family, and that speaks also to the idea of connectivity that Jamie had mentioned in terms of being connected.
Could I just
and stay? Yes, sir.
Sorry, could I just add one thing to Patricia? I think she raises a very good point, because sometimes you don't know where to access things. So that's what FounderTribes is there for, because you can access information and education on where to access things. In the UK, there's a fantastic company called Swoop Funding, where you can literally go as an entrepreneur and identify how to set up a company and get it set up, identify where the grants are available in your area, local area, and you can get it set up, where you can get alternative funding, different types of funding, equity investment, and all the way through the journey. And they're helping at the moment about 80,000 businesses a month to obtain grants, to obtain funding, equity funding, open up business bank accounts, etc. So there are resources out there that can really help first-time founders, early founders, to be able to really access their network and start doing what Jamie suggested, which is connecting to different groups and different people.
Wonderful. And Anne-Marie, what are your thoughts with regard to the timing for founders to start thinking about capital raising, fundraising?
Yeah, sure. I think there's some really great practical advice from Jamal and Patricia there. And I second what Patricia said. I don't think it's ever too early to be thinking about how you could start building relationships with potential investors, and even just the practice of regularly socializing your idea, getting feedback on it is going to be hugely beneficial in terms of getting you to think critically about the plan that you have in place, iterating and refining your ideas as you go. And then you'll also pick up really useful information on what might it be that you need to demonstrate in order to attract the investment when the time comes. So what are those metrics or KPIs that those potential investors might need to see? You're aware of what's important to which investors, and then you've got that in mind when you're ready to look at fundraising, I guess, more formally.
Wonderful, wonderful. And Rustin, what are your thoughts when it comes to the timing for founders when it comes to raising capital?
Yeah, I think there's a lot of factors that are dependent. When I think about raising capital, you have to understand the systems, and you can't ignore how the systems are currently structured. So if you're a founder who has experience at a big corporate or a big investment bank or something like that, where you have experience that VCs can relate to because they know what it's like to work at a big company like that, or then you can go out earlier. But if you're somebody who's starting something out of your basement and you didn't go to the big schools, then you have to do a lot more groundwork ahead of time, and likely you're going to have something more to show. You're going to have at least an MVP and probably even some revenue, because people are going to make determinations, unfortunately. And I think FounderTribes is doing a great job to break down those barriers, but still people are going to look for track record in some respect. And so depending on what your pedigree is, the more things you'll have to do to get into the realm of investors. So if you have a great idea, try to work it as best you can. If it doesn't require a ton of upfront capital, try to do what you can bootstrapping it, and even showing a little bit of revenue with a bootstrapping. Then you can go to an angel and say, hey, this is what I did with $1,000. Imagine if you gave me $25,000, I could do this much, right? And so having those real world examples, I think, help a lot more if you don't have as much pedigree and you're getting started in this space from the beginning.
Wonderful. And lastly, Jamie, how would you like? What's some of the advice that that you've given to founders as they start thinking about raising?
Well, it's interesting. I don't delineate quite so much between the fundraising and the learning process and exploration process. And I think this is a little bit what Anne-Marie was saying, where, and Patricia as well, that I think that you should be creating the connections with people just as part of your informational and your learning and your education and your road testing of your concept. So I'm thinking of one project where I was giving advice on inclusive capital project, for example, in the UK. Somebody asked my advice, what do you think about this? And I was giving advice and critiquing before I knew I was going to end up as an angel investor. So he was coming to me because I knew a little bit about the subject. We talked, we exchanged ideas, we stayed in touch. And it was only much later that he came to me and said, could you put in some capital? And so that process of learning and getting mentored isn't as distinct from the fundraising as some people might think. And so I do think it makes sense to be connecting to the potential world of funders even before you start raising the money. And that was certainly my experience. And if you can find angel investors who are willing to provide some guidance and some technical expertise and some being a sounding board, that's a great preparation for then returning and looking for assistance with capital raising.
Okay. On this issue of connectivity, I'd love to explore that a little more. Some founders may be more extroverted, some founders are introverted, and yet still, how do you encourage founders who may be more reserved to connect or be comfortable in the process of telling their story for their about their product? Like, how do you encourage founders to kind of step out of their comfort zone? Because sometimes a founder might be very siloed and myopic in terms of like building their business, and they want to build the business out or build their product, but they may not want to. They may feel less comfortable in terms of taking that extra step of connecting. How as an angel do you encourage founders to be more connected or to really invest in connectivity? Jamie, I'll start with you.
Well, you're asking the question of an introvert, so I don't have a good answer. I think it must be torture if you're an introverted, cerebral founder trying to go out and raise money. I do think that's where some of the more less affective ways of connecting, back to FounderTribes. If you can, if there's a more structured form of interaction. So I think structured forms of interactions like angel network presentations, where it's less about schmoozing people up and more about really the basics and the essence and more of an objective look at the business. That feels where an introvert like me would go hide. But I think it's tough duty if you're introverted to go out there and ask people for money. I don't envy.
Yeah. And Patricia, what are your thoughts on that in terms of like how should founders look to connect or feel more comfortable in connecting?
Well, one thing I would say is that if you really are serious about creating, building, and launching a business, I do think you have to go out of your comfort zone, because there's going to be so many things demanded of you that you're going to have to do that's not necessarily your natural areas of endeavor. But on a more practical point, unless you're completely a solo entrepreneur, you will usually have a small team. Witness Gary when he was building FounderTribe. You have a small team. At least make sure one of those people are the extrovert balancing act that you need to help cover, those areas that you can't do yourself.
Yeah. And Anne-Marie, what are your thoughts in terms of helping as founders look to connect?
Yeah, I would agree. Use the strengths in your team. I also think that practice makes perfect. So we all, I think to some degree, might not like public speaking, or we might not, rush to, do some schmoozing around some fundraising. But ultimately, it's about the passion of the idea and the mission. And even if you're an introvert, if you really believe in what you're doing and the difference that's going to make, you're going to find a way to talk about it and get people excited about it. It might look slightly different from an extrovert, But I think it's part of the course, and I think the more you practice, the more you just jump in at the deep end. Over time, the easier it will become, hopefully.
Wonderful, wonderful. And Rustin, what are your thoughts with regard to founders and connecting?
Yeah, I agree that the team is the most important thing, because if you're an introvert now, you're going to be an introvert forever. And VC is about it's half the battle of the venture capital world is marketing. I think that and so you have to build a team, and part of being a CEO of a company is knowing where your strengths are and where your weaknesses are, and you form your team around that. And that's when I look at founders to invest in, and as I'm counseling founders, like that's one of the first things that I look at is how did you build your team, because that's going to show how you're going to be an executive as your business grows. And you always have to be thinking about how your business looks at $1 billion when your business is at $0, because if you're not planning and scaling that way, you're going to hit the bumps. You're going to end up doing what a lot of founders do. They get uncomfortable and then they start reacting out of fear. And I think you find a lot of people who have great products and great ideas, because they're afraid of the process, end up doing things to self-sabotage. Whereas if they had somebody to balance them out, who understood the process more or was more extroverted, they could actually find themselves growing. And so really understanding why you're in it. I always say, are you doing this for money? Are you doing this for legacy? Or are you doing this for, because you really, and you have to balance those things, because if you're doing it for one reason, and something tells you, like there's people that are telling you, no, you should be making a ton of money, and you're uncomfortable, it's just not going to work. And I've seen too many failures of great businesses, because people didn't recognize the externalities that are going to come at them when they're taking other people's money.
Yeah, wonderful. And Jamal, from your perspective, have you ever had to advise founders in terms of like maybe stepping out of their comfort zones to connect more with others?
Yeah, I mean, look, I think whether you're an extrovert or an introvert, you can either come across too arrogant, or you can come across as too lack of confidence. And so it's about getting a balance right. And I think Anne-Marie rightly highlighted that it is about practice and practicing your pitch and practicing your thing. But what will shine through is passion. And if you really are passionate about your product, most investors will buy into that. That's what they buy into. And I think also it's worth signing up to various pitch events that are out there and see how other founders pitch their ideas and how they're received, because that's a great way of learning and going, okay, and then going back and practicing yourself, because it is about confidence at the end of the day, but passion will always shine through. I have met founders who are extremely introvert, may come across sometimes as almost being too rude, but yet the passion that they have on their product, you go, okay, I buy into it, because this guy will die on the hill for it, because she's so passionate, she's so believing in what she's doing or what he's doing, that they'll get there. And so I think that's, to me, is the key thing that I look for in any entrepreneur, is their passion and their belief in their product.
Okay, wonderful. As founders, they may, to earlier points that were mentioned, they may not have the education. That's why they come to FounderTribes, or the background. FounderTribes, again, can help equalize all of that. What do you say to founders who are contemplating angel investing versus institutional capital? Would you should more underrepresented entrepreneurs look to angel investing first before they start considering maybe institutional capital? What should be the thought process of a entrepreneur or founder as they look at angel investing versus institutional capital? How should they look at that if you were to give perspective and advice? Jamie, what would you say to them?
I mean, I think it's good to have a mix. I mean, my favorite investments are ones where it's both angel investors and VC at the same time, because they balance each other out. I like the professional, the discipline and profession of the VC, but I also like having the diversity of support that you get from angels. So I think the best thing to do is to have, think about having a mix of both. I think in general, VCs are going to be more efficient and industrial about what they're thinking about. I think angels will be more flexible. They're, generally speaking, certainly speaking for myself, less sophisticated, and so will be more flexible, more likely to be receptive to the theme of investing, more receptive to the fact that the founder is from an underrepresented group. That would be, so I think you have more flexibility. Probably, I think angel investors cut the founder a little bit more slack than VC would. I mean, I don't know if Jamal, you necessarily agree with that, but fundamentally, I think a mix of investors is useful, and you should be thinking about the mix of angel versus VC rather than one or the other.
Wonderful. And Jamal, I'd love to get your perspective on that as well.
Yeah, I agree with Jamie. I think it's really, talk to both. Talk to angels, talk to VCs. Probably angels will act quicker than the venture capitalists coming in. But more than likely you'll have both coming in at the same time, and one will give you discipline. And if the VC doesn't come in and the angels have invested, you've built a relationship with that VC, you're on their radar, and you then update them every month and say, look, by the way, just so you know, this is what we're doing. And you keep them updated, because then they feel that they're part of your journey, and then they may come along at a later stage. So it's never a bad thing if a venture capitalist, a VC says to you, not right for us at this moment in time, because that's a signal for saying, look, you're not quite ready. Come back to me, keep me updated, because I do really like you, because I've made the effort of looking into you.
Wonderful. And Patricia, what are your thoughts? Yes.
Thank you. I did just kind of want to jump in there. I also think we need to have a bit of dose of reality, right? So I'm here. I'm not really here for Integrity Capital, as it says with my name. I'm really here because of Extend Ventures. As I mentioned, we have done extensive research into the access to funding for diverse founders. And our report, Diversity Beyond Gender, people visit us on our website and download it, really showed the huge funding gap that exists. I'm sorry. So I would say, yes, love to have venture capital invested in underrepresented findings, but the reality is, right, that 0.24% of venture capital over the last 10 years in this country went to Black founders. And the even more tragic statistic is 0.02% of the venture capital in the last 10 years has gone to Black women. So that is a huge gap, right? And while we can sort of say yes, and I do know that since last year and some of the focus on racial equity, et cetera, things are moving. I don't think that they're moving necessarily to close that gap fast enough. So I would say angels are a way, and again, angel investing is a small proportion of startup funding, but still, it's probably, as Jamal has said, they will react quicker if they buy your story, if they believe in you, they will act quicker, and you have a better chance of accessing that capital quicker than VC. And also, there are channels, right? So there's 10 by 10. Right? There's Cornerstone Partners, there's Alma, Angels, investing in women. There are groups who are intentional, angel investing groups who are intentional about their giving, that are starting to emerge, develop, and grow. And I think that's where you can find, again, the investment that startups for underrepresented founders, you can find that.
I have to say very quickly, in the same way that there are, more often than not, we don't see a lot of underrepresented founders, we often don't see a lot of underrepresented investors, such as Jamal and Patricia, and that's something that definitely has to change, because it's again, to the statistic that Patricia mentioned, there is a dearth in both in the startup ecosystem and also in the investing ecosystem as well, in terms of people of color and underrepresented minorities. Anne-Marie, what are your thoughts in terms of this mix between angel and institutional investing for founders?
Yeah, I agree with everything that's been said. I think due to the access issues with VCs, and then some of the additional requirements that come with that type of relationship, I think it might be easier to start with angel investing, and there's a number of benefits to that because it's not just about capital. If you're working with an angel investor, they'll know other angel investors and be able to make introductions for you. They might take a personal and hands-on approach to your business, so you're going to get their know-how and expertise, and perhaps they will bring some new energy and inspiration to just elevate the team as well. So that might be a good place to start.
Wonderful. And Rustin, what are your thoughts?
Yeah, no, I think angels are definitely the best way to go early stage, and unless you have the next Facebook, it's going to be very difficult to get into VCs, even if you're a white man. And so I think the angel investors provide, as Anne-Marie said, not only the capital, but they're also more likely, because they are investing you in their personal capacity, they're going to be putting their heft and their expertise behind you because they want to protect their investment. And that's a great part of angels, is they have the time, because likely, as you've heard from all of us, most of us, say from Jamal, aren't doing 50 or 100 deals. We're strategically picking 3, 4, 5 deals because that's the amount of money that we have to put in. And so if we're putting in what is our hard-earned savings, we're going to make sure that people that we put our money behind are going to get the best of our knowledge in the various fields that we've come from. And that goes a long way. And I think that's what you have to understand when you're an entrepreneur, is who are the people who are going to have your support. VCs, they just have so many companies in their pipeline. They can only pay attention to so many at any given time. And so you have to make sure that you have people on your side and in your corner. And angels are normally going to be the ones who are advocating for you the most.
Wonderful. I can't believe, I do believe we are at time. I had one more question that I wanted to ask, and I feel like I have to ask it. How can we encourage more underrepresented groups to become angel investors? If we can, I don't know how much time we have, but I had to ask that question. How can we encourage more underrepresented groups to become angel investors? Jamal.
Well, I think it's joining things like FounderTribes and being involved in other underrepresented founders who are looking to raise capital, and that's a great way to access amazing talent. So I would seek it out. It's a great opportunity. It's always about giving back. You've had the opportunity to earn some money. Now let's help others to go on that same journey. So FounderTribes, I would say, is the mechanism I would use.
Okay, Anne-Marie.
Yeah, I'll just add to that. I think it's great points from Jamal. I think there's more that we can be doing on the outreach side to make investment opportunities more visible, especially for first-time investors as well. And so I think we need to just get more creative about, how we advertise our fundraising, and then also, maybe just be very specific and call out, first-time investors are welcome.
Yeah. I've just been told that our time is up. I'm so sorry. I would have loved to hear everyone else's perspective. Thank you all again for taking the time. Rustin, Jamie, Jamal, Patricia, Anne-Marie, thank you so much for taking your time and sharing your expertise. Would love to continue this another time. And thank you. And thank you again, Gary, for putting this together, and for FounderTribes.
Thanks, Rico.
Thank you. Thank you guys again.
Thank you.
Cheers.
We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with a founder submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are two possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today.
Hello. Hi.
Hello. Can you guys hear me?
Yes. Can you hear me okay?
Perfect.
Lauren, can
Yes,
you
can
hear
hear
us?
you perfectly.
Oh,
I'm shocked
awesome.
that I got the technology right. So I had to ask.
I know, I feel the same way. It's always funny when you're doing these virtually, right? Where before you just walk out on stage and you sit down. So thank you so much for being here and to talk about this really important topic. And thank you to FounderTribe for sponsoring us and bringing us together for this conversation. My name is Erin Horn McKinney. I'm the Executive Vice President for Innovation and Strategy for the Association for Enterprise Opportunity. AEO is a trade association for CDFIs, community development financial institutions, entrepreneurs, and entrepreneurial serving organizations and banks who support entrepreneurs and micro businesses. With that, I'd like to take a moment to go around and have our speakers introduce themselves. Lauren, can we start with you?
Yeah, sure. So I'm Lauren Mathurin. I'm a vice president at Silicon Valley Bank. I work in the early stage practice, so looking after companies that are pre-seed up to Series A. We help them with their banking for UK and US jurisdictions. And all our companies are tech, innovation, or life science types of companies. And that's me.
Thank you.
Awesome. Hi, everyone. Thank you for having me. My name is Seun Toye Kayode. I'm a vice president at Goldman Sachs, heading up our Launch with GS initiative in Europe, Middle East, and Africa. Launch with GS is our $1 billion commitment to close the investing gap for overlooked founders. And we do that by intentionally backing overlooked founders and also funders. From a founder and direct investing perspective in companies, we're focused at the Series B+ stage. And then we sort of impact the earlier stage of the market by writing checks to check writers who are aligned in our vision that we should prioritize overlooked founders and funders. Really excited to be here to have this conversation.
Yes, thank you both so much for being here. And I think just in your introduction, Seun, what you brought up is actually really the first question that I have, which is around how are your organizations supporting Black founders, and how did that come about, and talk about the evolution? And I pose that to both of you.
Should I go? Maybe I should go first. So I actually joined the Launch with GS team in January, and it was really because I've been at Goldman for 8 years. I was at a point in my career where I was like, I can either like look at the community from the outside or actually become sort of part of the solution. And how did Launch with GS start? It started in 2018. You know, for the first time, we had a chief strategy officer, an amazing woman called Stephanie Cohen, and she really was like, data is showing that diverse teams outperform. At Goldman, a lot of the things that we do are driven by this thesis. We're a very diverse firm. We hire with a diversity lens, etc. But then when you look at the venture capital ecosystem, you know, women and people of color are underfunded. You know, I live in the UK, so those are the stats that affect me the most. I listened to the last conversation where a good friend of mine, Patricia from Extend Ventures, was sharing that 0.2% of venture capital went to women. Only one Black woman has raised a Series A in the last 10 years, as at the beginning of 2020. It didn't even need to take 6 degrees of separation for me to realize that actually I knew her. And, you know, only 38 people of color have raised venture funding in the last 10 years. These stats are abhorrent. And, you know, as a firm, we really feel like we have an opportunity. And I think we'll talk about this later, about the role of large organizations and institutions to be part of the solution. And so 2018, it was at first actually focused on women in the US. In 2019, we expanded to include people of color, and we, you know, put up an advisory council of incredibly talented leaders in the Black ecosystem in the US, as well as decided to start a Black and Latinx strategy. You know, so speaking about Black founders specifically, what we do is we recognize like the gap for, you know, venture capital funding is so far from the experience of like a white male to a Black founder that we couldn't just do capital alone. There was a lot of work that needed to be done in the ecosystem. And so we decided for the first time, you know, we're definitely not an accelerator, but we decided to actually start our own in-house accelerator program, which we call our entrepreneur cohort. The first cohort was in 2020, just as the pandemic was starting. It was always going to be virtual, so I guess we were lucky in that sense. And the second cohort in the US was in 2021, and we will have our first Black tech cohort in 2022. And why are we doing this? You know, one research shows that a warm handshake, you know, will lead you to a check much quicker than cold calling will. And so I like to describe our accelerator program as a warm handshaking program. You know, we are a large organization. We have so many different ways where we support businesses and companies. We have a focus on, you know, delivering the best results for our clients. How do we bring all of this energy, all of this expertise to the Black venture ecosystem? And so what we do with the cohort is we kind of amass a deal team for every single company. We work with them to figure out, what are your priorities? Is it selling into some of our customers? Obviously, as a large investment bank, we have customers across the world in every single sector. We also have a very, very successful technology banking franchise. How do we sort of give our companies access to these ecosystems, access to this expertise? And so we have our most senior individuals at our firm, you know, focusing on these founders for 4 to 6 weeks. And, you know, by doing that, we're actually responding to the excuse, I think, that a lot of investors have, which is that, you know, but we definitely want to invest in Black founders, but we just can't find them. Well, if you look at our 2020 cohort, you have 14 incredible companies. Our 2021 cohort, you have 15 incredible companies. And so we really take a long view on this, where we feel like we have a responsibility as a large organization, and personally, as a person of color myself, you know, to use the privilege of being at a firm like this to really impact the ecosystem.
Thank you. And you're absolutely right. Social capital can be just as powerful or even more powerful than a financial investment. Lauren.
Yeah, I mean, so that was pretty impressive, Cheyenne. So really good to hear what you're doing at Goldman's. But Silicon Valley Bank have a program called Access to Innovation, which has been running since 2017. It's a global initiative, which is both in the UK and in the US. Because we've been in the US for a lot longer than we have been in the UK, obviously it's a lot more advanced out there. And also, you know, as you'll know, there is so much more in this space in the US than there is here in the UK. So we are really trying to work with all the ecosystem builders here in the UK that are doing great things already. And we are investing in them. So, you know, doing a lot of sponsorships with various different companies, helping them to, you know, supporting them with their programs and their initiatives, and offering SVB's expertise. So essentially SVB, you know, as the name would suggest, Silicon Valley Bank, you know, we are the bank for tech and innovation companies. We have a vast network of people that we work with, whether that be investors, corporates, other clients, and just people that work in the bank which have extensive knowledge. So we use that and invest all of that, I guess, into the founders that we're working with. We've just hired a new diversity, equity and inclusion regional director who's going to be looking after the whole of EMEA. So there'll be a lot more new initiatives happening. As currently, you know, we've been working under the guise of the US and doing as much as we can here in the UK, but making sure that, you know, as I said, working with various different programs to really help give them our expertise. So people like, you know, the Newton program, who are developing the next wave of investors. At the end of the day, we know you gave the stats, right? There are not enough people of color getting investment, right? And that's because, unfortunately, everyone looks the same. So people are only investing in people that they know. It's a common, you know, it's a common thing. We all know the story about it. I don't need to go into too much detail, but, you know, if we have more diverse investors, they're naturally going to start investing in more diverse founders. And then the numbers will start to change. You know, currently, as you said, 0.2% of, you know, Black founders were invested in, you know, in last year. That is just not good enough. Even if we times that by 4, right, we're still at only 1%. Not even 1%, less than 1%. It's shocking. So we need to start working with people who can start implementing that change, you know, hiring more diverse talent into tech companies who start to change the way things look, and then change the perception as well of having Black and diverse founders in the ecosystem.
Absolutely. You know, it's interesting that you both talk a little bit about the data, because for so long, accelerators and incubators didn't even document race because it wasn't even something that they were looking into. Although you could look at a lot of the cohorts and see a lack of diversity, right? Not just with the diversity in race, but also in gender. And then over the last few years, there started to be more and more data that has come out to really highlight these issues that we're discussing. For example, Project Diane, which was a report that started several years ago by Digital Undivided. In their first study, they were able to show that the average successful Black female founder raises around $40,000, $40,000 to $50,000, where the average failing white male-led tech startup receives an average of 1.2 million. And those numbers haven't shifted that much over the past several years of that report being repeated. And I share that that data to show that even if we saw for Black female founders specifically, just because they're the ones that receive the least amount of investment, you know, even when you're looking at historically, it's been less than 0.00001% of Black female founders that get invested in at all. But when you add Black founders, any founders of color and women together, the numbers still haven't reached a total. And so this is women as well. have still not reached over 8% of venture capital funding, right? Which is just staggering. And even though the last year and all of the things that have happened over the events of the last year have triggered a release of funding, it's interesting. And I should share, and I didn't say this in my intro, I actually am here in Minneapolis. So that's where I work from, which is, you know, we like to think the epicenter of this global movement in racial reckoning, where George Floyd was murdered. As a matter of fact, just steps away from where my office is right now is where he was murdered and where George Floyd Square sits. And so I think there's a lot of things that have happened to address this funding just in the last year and a half. And so I'd like to speak a little bit more around for your organizations, what are some wins that have come out of the last year, and and what have you learned from all of those wins, and just kind of like the movements that are happening in your organization?
Yeah, I think it's a great question. And I like that you brought up the point about, more capital being available in the ecosystem, but, that not necessarily translating to better outcomes for people of color and for women. I was actually just reading an article before this that women and people of color are actually worse off than they were before George Floyd was murdered and before the pandemic. And the reason for that is actually what you touched on, Lauren, about investor mindsets and investor behavior. If most investors are white men, when they're put in a position of uncertainty, what they'll do is double down on what they already know. So rather than trying to do anything different, you want to deliver returns to your investors, you're going to focus on what you already know, which is investing in other white men that look like you. Which is why for us, our approach is not just to invest in companies directly, but to also invest in, people of color that are, fund managers and are check writers who will go on to then invest in businesses and people of color. So we recently invested in Collab Capital, which is run by Jewel Burke Solomon out of Atlanta, to focus on Black founders in that region. That was a great win for us because, she's actually on our advisory council for our Black and Latinx strategy. So very close to home, but we trust her vision. And we know that the capital will be deployed in a way that would genuinely impact, the lives of Black people. Another thing I should say is, Partake Foods was in our cohort in 2020. She went on to raise venture funding and became the first woman of color to raise over $1 million for a food startup. And so another example is Landed, recently in our 2021 cohort, went on to raise a $31 million Series B round. And I'm just going to read what they are. So they offer a shared equity program to help teachers, first responders, and healthcare workers buy their own homes. We all know the impact of home ownership on generational wealth. And so, it's not just about investing in Black founders, it's also about investing in innovation. Human beings tend to, create businesses and ideas that actually resolve problems that we have and experience. And so when we exclude a huge part of the world, I mean, if you think about women, we actually are the majority of the population, yet we are, we're receiving less than 2% of venture capital funding in the UK, for example. That is just not okay. And so for us, these wins, they're great and we're excited about them. But to be honest, there's so much more that we need to do. And, so this week has been London Tech Week. It's been very exciting. I've had the privilege of, obviously taking on this role in a pandemic over the last 9 months, meeting everybody on Zoom, including people like Gary from FounderTribes, etc. We're able to bring, a lot of people together, 2 nights ago for what I called the Black Leaders Dinner, just to talk about what can a program like Launch with GS and an organization like Goldman Sachs do to impact the ecosystem in Europe. And, I really left that dinner really understanding that it's not just about capital, because actually you find a lot of founders getting stuck at the seed round and not able to raise a Series A, or at the Series A round and not able to get to a Series B. Why is it important for banks to be involved in the conversation? The simple answer from my perspective is capacity. We have the capacity to not just support early stage businesses through our programs like 10,000 Women and 10,000 Small Businesses out of our foundation, but then we also can support at the venture stage with Launch with GS up until IPO, and then beyond into impacting the community. If we even go deeper into looking at, the different stages of funding, we have different pools of capital that can be applied. One of our companies, Block Power, actually raised money from us through debt financing. So, when you are a large organization with loads of different, ways to deploy capital, I really do feel like it's a responsibility to try to adapt that to help the ecosystem that you care about, which is why I think it's very, very important for large institutions to get into this conversation, to start to create programs to drive change, and not just leave this to the venture capitalists and the VC firms, who for the most part are white male.
Right, and those policies, you do have an opportunity to impact policies and impact those that you have as clients or that you do business with by taking a look and holding them accountable with, you know, their founding teams or who's on their board. And, you know, I think that it's not okay to say there's nothing I can do. It's not my problem. It's all of our problems, and we all are empowered to a certain degree to do something. And it's interesting you mentioned Joel Solomon, who I know is also a speaker during London Tech Week as well. So, Lauren, did you want to speak to the question?
Yeah, absolutely. So, you know, it's really funny because I would like to say that at SVB, we haven't just had a knee-jerk reaction to what happened with George Floyd. You know, we have been trying to do this since 2017, and you know, before that, even before we started the Access to Innovation, it's always been at the forefront of our minds. And I guess what I would like to say is that, you know, we're not just trying to just create something because we should do it. We want to do it, and we're trying to do it purposefully and with the best outcome for our founders. At the end of the day, what we're trying to do is we're trying to build a framework so that they have the best probability of success. It's all good and well, you know, throwing checks at people, but if they don't have the access to knowledge, the access to the network, like what's going to happen after that? You know, they're going to have a product, an MVP, and then what happens after that? We need to support these founders, and I think at SVB that's where we're really, really trying to create this framework. And you know, we're sponsoring various different, as I said, ecosystem builders such as Coloring Tech. You know, working with FounderTribes, and you know, we're all trying to solve the same problem, right? So, you know, at Goldman Sachs, you know, what you're doing is great. You know, at SVB, we're trying to do something as well. And if we just all work collaboratively, we can all hopefully start to make those changes and work together. You know, you mentioned about, you know, financing some of the later stage companies. People need to understand what that means. If they don't even know what venture debt is, then how do you solve the problem for them? You know, they don't know what to ask for. You know, they're just walking blindly. So having access to information is also massive, and something that SVB is absolutely dedicated to doing. Working with founders, not just Black founders, but, you know, female founders, founders from various different socioeconomic backgrounds as well. Because again, that's where the knowledge really comes in. If you're not from, you know, and I'll use the example in the US, but one of the main Ivy League universities, this isn't, you know, VC investment is not something that's really spoken about, right? Tech is cool now. So people are more having those conversations. But if you just go to like a standard college, especially here in the UK, it's not something that's spoken about. You know, you get opportunities thrown at you. So, you know, do you want to be a doctor? Do you want to be a lawyer? Do you want to go and work in travel or something like that? But it's having that education, I think, is really important and something that we're really, really dedicated to. In terms of investment, you know, we are working with, you know, we've done an investment into Valence in the US, you know, which is a massive Black talent hub and networking community. You know, as I said, working with Coloring Tech here in the UK. We're investing in our own functions within the bank. So creating a new channel which will be dedicated to finding all new talent, but with a laser sharp focus on diverse talent. So that's very exciting for us, and, you know, something that we're working on at the moment. So a few wins there, but definitely not stopping. And again, as I said, it's not just a knee-jerk reaction. It's very much, we want to do this and we want to do it with a purpose, because this isn't just something that's here for today. This is something that needs to go on, and it should be business as usual. It shouldn't be, oh, because this has happened, we now need to focus. The stats are shocking. We all know that. But we need to start making these changes. I read, actually, it's funny that you said about reading something just before this. I actually read, and I'm going to find it, that, and it's about female founders. It was saying that for female founders to make up 10% of all VC deals, just 10%, it's going to take up to 25 years. Now, how is that even possible? 25 years to make 10% of all deals done in the UK. Like, you know, things need to be done and done quickly.
Yeah, I agree with you. And I love what you said about education, you know, and it's actually a very important point, which is why for us, like I said, it's not just about capital. It's not just about investing in funds. It's also about the ecosystem and bringing people together, which is what we do in our core, what we provide training across all of these things. I was speaking to a close friend of mine who's a founder, and she was saying, no one told her that she needed to focus on MRR. She raised a seed round, and her investors were just kind of happy to keep her there, happy to have, a Black founder on their portfolio, that they kind of were okay with allowing to fail, because for them, it wasn't about the long term. Like, who was she going to go to talk about, what she needed to scale up her business, when we know that 88% of Black founded businesses are bootstrapped? Because the truth is, where are Black founders going to find friends and family rounds? Socioeconomically, we don't have those communities where we can just go and get, a $1 million check from a godfather, etc. So the education piece is extremely important. And I think, like you said, Lauren, working together, Google has done an amazing job of doing their Black Founder Fund, where they've shown us, 30 incredible Black founders in Europe. We should all see it as a collective responsibility to ensure that all of those businesses get funded and they do not fail. And, we all know that there's this silent work that we all do as people of color, where it's like, you're doing the thing that you're doing, but then you're also kind of working in the community and the ecosystem. And we know that that's a responsibility that we have to bear, but it shouldn't last forever. The ability to come together as a group of people, share our knowledge, share our thoughts, use our positions of privilege to move the ecosystem forward through collaboration is absolutely critical.
And I think you bring up a really good point too around what happens with a lot of Black founders is that they are brought in for photo ops and not really being critically assessed. I'm also the founder of Black Female Founders, a global membership organization for female-led tech startups and female tech leaders throughout the Black diaspora. We were recently acquired by Black Women Talk Tech. But one of the things that BFF did is we also had a pre-accelerator for Black female founders. And so many of them were so appreciative of that programming in the curriculum, because they said for the first time, even if they were able to get into one, it introduced them to the ecosystem. And I think we've alluded to before, teaching them the language. It can almost be, that can be just a barrier itself of understanding everything from the terms to the, how financing works. But the other thing is that, and let me just say that the camaraderie, of course, was a big community of having someone just be able to take race off the table and gender off the table and just really have community with others, because entrepreneurship can be a very lonely thing, right? Yeah. But the point that I really wanted to make was they felt like they were actually being critically supported, versus a lot of programs and situations they'd been in, they were just passed on through the program so they could be there for the photo op. They could be a number, and oftentimes were the only one in their cohorts and programs. But they felt like people were being too nice and not really helping them build their business, because no one wanted to be the one to say, actually, you need to work on this element of your business, and walk on eggshells with them versus actually supporting them. But I think you also both brought up an interesting point around changing the face of those on the other side of the table from founders, right? So when it comes to investors and banks, I really like to be solution oriented. I don't like to just talk about the problem. I like to give some solutions. So let's talk about how can the industry, how can venture capital really change who's on the other side of the table and the implications of that. And either one of you can go first.
Yeah, I'll start with that one. I think everyone has a responsibility to start measuring some data, right? And really looking at what your organization looks like. So if, and we said it about the investors, if everyone looks the same, you're not going to have that diversity of thought, right? You're not going to have that diversity of, different collaboration and so on and so forth. So it has to start from top down. So first of all, I think people need to look inside their organizations and look at who the managers are, who are the decision makers, who are the ones that are going to be, who can actually implement these changes, right? And then it kind of trickles down from there. So you'll find more people of color, more females, all that kind of stuff changing. And then the people that we then go and speak to also changes. And then that's how we'll start building more pipelines, and that's how we'll start getting more change and more people through the door. It sounds really simple, and I know it's definitely not that simple, because there's all kinds of issues. Well, you hear there's all kinds of issues like, where do you find the talent? Where do you find the companies? Where do you find this, that, and the other? But if we have people in universities, like our dear friend Gary, speaking about entrepreneurship and so on and so forth, and speaking to Black people, young Black people, and making them know that this is actually possible. Look at me, I look the same as you and I've done it. Then it kind of gives more people inspiration and hope to do that also. If you have someone who doesn't look like you, who's not from the same background as you, saying, oh yeah, go and do it, it doesn't seem possible, right? And as I said, it sounds very simple, but I just believe that, from the top down, from the top down, things need to change.
Yeah, I completely agree with you. In the last conversation, I think the last question was around how to get more people into angel investing. Andy Ayim runs the Angel Investing School, which I think is a phenomenal program that anyone can take to really learn the ropes about angel investing. And why am I talking about angel investing? Because the more check writers that they are, the more people will actually be encouraged to go into VC, to start companies. I was speaking to someone yesterday who was telling me that a lot of founders are stuck in jobs because they know these stats. If you hear that, only 0.2% of people that look like you get funded, why are you going to leave your high-paying job to take a risk on an idea? So I think it's really just creating like that the support network for Black founders and people of color, quite frankly, is not there. I don't think, a white male guy from Stanford or Harvard or Oxford or Cambridge will feel a sense of fear in taking a risk to start a business. But, a person of color in the exact same position probably has to think about family, is likely to be one of the first people in their community to be in that situation. Are you really going to risk it? Which is why those of us that, are in positions of privilege, have access to great education in a position of privilege, need to actually learn to put some capital into the early stage ecosystem. And that's why I'm such a big proponent of angel investing. Andy actually was at Goldman and did an introductory session to angel investing for our firm-wide Black network, because this was early on in my journey of heading up Launch with GS. And I was like, this problem is actually a lot earlier stage than even starting to build a business. It starts from the mindset and the mentality of understanding, like, what is the value of investing in companies? What is the value of backing people early? And, angel investing is actually a really good route to building, again, generational wealth. And so our people just need to become more educated and put some time into angel investing. I love your point also about representation and diversity and inclusion, and I think, holding corporations accountable is extremely important. We spoke earlier about, not just the companies, but also the boards. Who are the people around the table that have these board seats? And we actually, came out sort of 2 years ago to say that we wouldn't take any company public unless they had one woman on their board. This earlier this year, we said that we increased that to 2 people, including 1 person of color. And we are saying that we, one of the largest investment banks in the world, are not going to take a company public if these things are not achieved. And it's definitely a good thing to do as an organization, to put out those stats. But also, I think what we've been really good at is creating mechanisms and structures to support that. So we have an incredible team that actually helps these companies source diverse talent. And so all of us working together are able to actually move the conversation forward by not just setting sort of these goals and these strategies, but also building teams and putting people in positions where it is actually your job to make this happen, not just inside of our firm, but also in the ecosystem.
Absolutely. I think you also talked about angel investing, which I am really, and being educated on the fact that many people can be angel investors who don't even realize it, especially in our community. I'm an angel investor and a member of Pipeline Angels here in the US, which is an organization that teaches women how to be angel investors, to invest in women-led companies. But I think that there's opportunities for similar organizations to start, and there have been. There's a Black Angel Network here in the U.S. But what I've realized in the Black community, and this is just really globally, I see that there's such miseducation around what position do you need to be in order to be an angel investor. In the U.S., you only have to consistently make over $200,000 a year in order to be considered an accredited investor. And no one's checking that, right? Like nobody makes you pull out your taxes to show whether or not you've done that. But it's 200,000 individually, and $1 million in assets collectively if you're married. But the interesting part about it is that so many of our colleagues make that amount or more, but are not investing and could help be problem solve for some of, as you mentioned, that friends and family round. Because one of the other things that I find really interesting in the data, and also from just the experiences and narratives that I hear from Black founders, which is they're expected and oftentimes will not get invested in because investors will say, well, you're not working on this full time. And then until you do, how, why would I invest in you? And I think one of you mentioned before, oftentimes for Black founders, they're the first person in their family to go to college. And there's a huge risk in making that jump. And it's very hard to be in a position to make that full-time leap, which is interesting because I think it's just an easy excuse, right? To make that decision when obviously if they had the investment, then they would be able to go full-time. And I think there needs to be cultural sensitivity around communities of color and what the path of entrepreneurship, what that looks like in different families. I think culturally, for some Black families, or a lot of Black families, and especially for ones where somebody has been the first to go to university or college, it's not actually looked at in a positive way versus being a doctor or a lawyer or a banker or what have you, right? It's looked at as being selfish, putting your family financially at risk. And because you're expected, if you're the first one to come out of school, to go and help support the rest of your family, oftentimes help put others through school. And so there's a lot of internal conflict that happens with Black founders when making these decisions around following their dream and passion and their subject matter expertise and something that they know they could do, and the commitments that they have to the ones that they love the most. And that's not even extended family. Sometimes it's just even their immediate family because they don't have that friends and family round. So I also wanted to speak to this even for the two of you. How has all that's happening and impact your professional trajectory? And looking at your path, are there opportunities that you're thinking about where you'd like to see your career go so that you can be more impactful in this type of work?
Very good question. Very good question. So I'm extremely passionate about this topic, obviously being a Black woman. I also extremely passionate about working with startup founders. And I'm fortunate enough to feel like I'm in a position in my role, in my job currently, where I can do everything that I love and still help the people that I love, right? And what I'm passionate about. And I'm fortunate, again, to be given the autonomy to be able to mentor companies, to go out and speak to new community hubs and do a whole bunch of stuff, which sometimes people aren't fortunate enough to be able to do. Like, this is your role, this is what you've got to do, you've got to perform here. So me personally, I just want more of the same. I just want to keep continuing to build that pipeline. I want to continue speaking to founders. I want to continue, sharing my expertise and giving access to the network that I've built at SVB and my colleagues, right? I don't know everything, but I work with a lot of really, really smart people who do, and collectively we can really, really help founders. So for me personally, I just want more of the same and just being able to continue to help founders, Black founders, female founders, all founders get to that point. But the fact that I can actually do what I'm passionate about by working with Black founders and actually, it doesn't matter how much they've raised. It doesn't matter where they are on their journey. I'm still given the autonomy to be able to do that. And that is extremely refreshing, I think, working for a big bank.
Amen. I agree with you, Lauren. I agree with you completely. For me, it's the same. I'm still kind of early in the journey. I mean, I've only done this role for 9 months, but I feel the same. I think it's such a privilege and an honor to be in a seat where you can do work that genuinely impacts your community. You talked about sponsorships earlier. We've been able to sponsor Black Valley. We're actually going to the pitch day later today. The opportunity to work with, your community, feel like you're adding value. There's kind of nothing like that. And I think the good thing about the pandemic, and everything that we've been through as a community is people are actually aligning what they do for their day job to their interest. And impact has become the way that we judge ourselves. It's like, am I going to waste my time, or am I actually going to do something that's impactful? And I was really, really glad that I was able to make that transition during the pandemic. And so for me, similar to you, Lauren, it's really just more of the same.
Well, and building on that, as internal advocates, what's our advice for individuals who are working within their corporations and trying to make those changes and be supportive, and how sometimes in certain organizations, identifying this passion and being supportive of Black founders, people are in a position where it impacts their professional trajectory the more that they advocate, or the more that they get pushed into diversity, equity, and inclusion roles versus the actual, main part of the business, right? What's our advice for those internal advocates?
I'm happy to. Oh, sorry. Go for it, Lauren.
Yeah, I was just going to say, if you, at the end of the day, you're working for a company, right? You've been employed to do a job, right? I think the first point I would make is do what you do and do it well, because then you kind of give yourself a bit of room to do whatever else you like. You can't be in a role and you're not performing in your role because you're doing all the stuff that you're really passionate about, because the first thing that's going to happen is, well, actually, do you know what? You need to take your foot off the brake, off the gas here, and do your day job. So I think the first thing I would say is, like, do what you're doing well, but if you can add what you're passionate about to it to help you do what you're doing really well, then do that. And then once you're kind of like on that journey, you can start adding all the other little bits and pieces that you're really passionate about. But don't give up, right? And if you're in a company whereby they don't want you doing that kind of stuff, or they're going to tell you, well, actually, you're not meant to be focusing on that, you need to focus on this, you need to kind of question whether you're in the right company. I would say, personally.
That was exactly what I was going to say. I was going to say, you need to understand the company that you're in, understand the strategy, and read between the lines. I mean, recently we moved and launched with GS from our executive office into our asset management division, which was really an effort by our CEO to bring all of our investing teams together. For me, the signal and the fact that we were sat in our asset management division said it all. It means that it's a priority. And so, understand the strategy of the firm that you're in. I'm not one to sit and complain and moan. I think you need to put yourself in a position to work hard and do what you're doing well. But, for many years before I ever worked in launch with GS, I volunteered with our firm, My Black Network. I actually now head up the recruitment pillar for our firm, My Black Network, because I meet a lot of people of color. So I'm in the recruitment pillar, I'm doing launch with GS. Everything sort of fits together. And the other thing I will say, though, is that doesn't happen overnight. I say to people, it's taken me 7 years to get to this position where I feel like all the different threads of my interests are intertwined. So there is a little bit of like working hard and building up that credibility over years, and then being able to leverage your position to build, the career that you want in the organization that you're in. But, if you feel like you can't bring your whole self to work, you can't express your interests, I would question whether the organization is right for you in the first place.
I think that's a really good point. And I do think that if, there are ways to do what you love. And I think that the three of us are very fortunate to be in positions where we get to align our passions with our professions. But I think that there are opportunities to really say, if you're not in a space that aligns with your personal mission and goals, are you in the right organization? And especially now, given the last year, there are so many roles that have opened up that are around impact investing, that are around in large organizations, that are around programming that does this work and is helping to expand and diversify the ecosystem. I know that we're getting ready to wrap up on time, but I wanted to give you both a moment to address, how is your organization ensuring that the work that you're doing now and the programs that you've highlighted are authentic and measuring impact?
I love what Lauren said at the beginning about working with the community that you're already in. That was something that came off the back of our Black Leaders dinner, where actually Ashley from Color and Tech did say, he didn't think that people recognized that capital wasn't the only answer. What you need to be doing for Black founders is giving them customers. And that is something that I'm literally not going to forget. And it just reinforces the need to continue to do the work that we do with companies by bringing them into our firm and running the program that we run, because quite frankly, there is nothing like that. Remaining authentic. I think for me, I don't think we need to reinvent the wheel. I really don't. I do not think we need to reinvent the wheel. I think we need to be empowering communities that are doing work, communities like YSYS, Your Startup, Your Story, communities like Color in Tech, as you mentioned, Black Valley, Do It Now. Like there's so many different ecosystem builders, Black Girls First with Nicole, like Fest with Nicole. There's so many different things that are already going on. As a large organization, you don't want to come into the conversation and try and dominate it with large check sizes and brand name and brand value. The purpose, I think, of this role and this program is to lend that brand value to organizations actually doing the groundwork. And I think that's what true authenticity is. And I think actually that's what the ecosystem needs, because so many people have been trying to work at this on their own. Maybe organizations like Silicon Valley Bank, Goldman Sachs, Google, etc. What we can actually do is empower these organizations with capital, but also with support.
And how are they measuring? So the programs that you all are rolling out at Goldman Sachs, how are you measuring that impact?
Well, we measure the impact by, one of the things that we're actually looking at is like how quickly founders are able to then raise their next round of capital. I already mentioned like some of the stories on that. We're very proud of that. I think we also recognize that this is long-term work. It's long-term work. We can't say, oh, we've invested in one Black company this year. Next year, how is it doing? Next year, we need to recognize that we need to give these companies time to grow. And I think one good thing that we do at Goldman is we're very team-oriented. And like I said, we have so many different parts of our bank and organization. It really is opening up as much of that to these founders as possible to ensure that they're not stuck at the seed round, they're not stuck at Series A, that at every point of when they need to raise capital and build their business, that we are there to support them. If they even wanted to sell into customers, we can provide expertise on that. The ones that will hopefully go on to IPO, we're right there with them in that as well. So I think it's a long-term process, it's a long-term program. And I actually think it will be detrimental to this to put really stringent like ways of measuring impact on sort of like an annual basis or even a quarterly basis on this kind of program. Like I always joke about this to my manager that I come from our sales and trading organization. You're measured by your last quarter. And I remember like 6 months into the role when I was like, how are we even doing? Does any of this even matter? Does it make sense? And it's just transitioning from that, hyper mentality of like, what are your numbers for the first quarter, to understanding that actually maybe what we're actually doing is planting the seeds, and somebody needs to plant the seeds.
Yeah, that's a great point. Yeah, absolutely. Lauren.
I literally cannot say anything different to what has just been said. Like it's exactly the same as, at Silicon Valley Bank. We want to be there for the journey of our clients from startup right to IPO, lending our expertise, lending our network, lending our knowledge to these founders. And I totally agree in that if we start to put metrics on success, we're going to fail because that's too much pressure. And we've never done this before. Like this is all new. So how do we even measure success? If we're getting one founder invested, if we're getting 5, it's all good because it wasn't happening before. So, I think we have to just go into it with the mindset that, are we educating? Are we opening up our network? Are we giving people access to capital? So that doesn't need to be capital from us personally out of our purse, but putting them in front of the right people that can do that. So, you mentioned about working with the Color in Tech and all the different, hubs out there, YSYS, Black Seed, so on and so forth. We need to empower them. We can't just come in on the white horse and be like, yeah, we're here to save the day now. No. There's so many people, as you mentioned, that have been doing this already and been doing it for a long time. But what we need to do is try and help pull everyone together to fight the same fight, to walk the same walk and go on the same journey together. And I think, as I said, if that stat changes from 0.2 to 0.3, to 0.4, we're winning. We're doing something right.
It's so interesting. Even, I don't know if you all paid attention even to the picture that's in our backdrop here. There's not one person of color in it. Right. Yeah. And that's so interesting because, I think I just noticed it because I do think representation matters. Right. And it also in people need to see themselves reflected in the community and reflected with the organizations that they work with, people that understand their journey. I want to go quickly. There was a question in the chat. And so if there are, for those in the audience, if there's a question that you'd like to pose just in our last few minutes, please post it in the chat. But one that came up is, do you think there will be a minority lash? Because I'm hearing that in the US.
A minority what, sorry?
They said the minority lash. I think backlash is what is really kind of what they're referring to. Will there be a minority backlash for like what's all this attention and effort that's been put toward minorities over the last year?
Oh yeah, of course. You know, we see it already. There was a great article in the Financial Times recently about Black Seed and what they're doing in terms of like creating the new Silicon Valley in Brixton, right?
Yeah.
And you go in to read the comments of that article, and honestly, like I couldn't even get through it. I was just like, how can you see this and take anything negative from it? Like at the end of the day, like all we're trying to do, anyone is trying to do, is just help people that have been underserved, underestimated, underprivileged, move forward. Like, how can that be a bad thing? So I think, of course, there's going to be backlash. And in a way, it is positive discrimination. Whether that's a good thing or a bad thing, I don't know. I believe it's a good thing, right? But we just have to move forward with it. You know, at the end of the day, you just got to keep going, because if you read every single comment, if you, you know, take all of that on board, you'll stop. You know, you just got to keep going. That's what I'd say.
I agree completely. And my view is, luckily, venture capital is not, you know, literature. It's not like we're writing novels and we're hoping someone buys it. These are businesses that generate money and will one day, like, the results will speak for themselves. So I think it's just, you're good. You're better than me, Lauren. I didn't even read the comments because I already knew what to expect. It's like you just have to drown out the noise and focus on the end goal. Like I said, this is a long game. As these companies have more and more success, you can't argue with results. And my hope is that, you know, in my own sort of lifetime and doing this kind of work, people will start feeling really bad about not being in the deals that they should have been in because of how successful these companies are. You can't argue with results. And so I think all of us, you know, you, Lauren, myself, even you, Erin, we're focusing on getting those results. And that's what we need to remain focused on, and not the noise.
Yeah.
So in our last, 6 minutes here, I want to give you an opportunity to tell those in the audience how they can find you, give some final remarks about, what you think what else the industry can do because I want to leave with some action items for those that are listening and who are with companies and want to make changes. And even more specifically, if you want to speak just to even banking, what they can do. So what are some takeaways that you want people to leave this conversation with?
I would say 3 takeaways is look at access to network, finding access to networks, look at people who can introduce you to the right people for capital, to access to capital, and also education, right? And these are all 3 things that Silicon Valley Bank are dedicated to doing, right? We are doing events for underrepresented founders. We are creating content on our website, so you can go in and read up on what you need to do as a founder. It doesn't necessarily mean that you have to be a diverse founder. Any founder can read up on it, but that information is there for you. And you can reach out to me or any of my colleagues at Silicon Valley Bank. We're always happy to have a chat. We're always happy to kind of like lend our expertise. Many of us offer mentoring. I know a lot of people in the Black community are over-mentored already. So, it's not something that I would put, at the forefront, but it does help, or it helps having an accountability partner. Like I'm an accountability partner for quite a few companies, and, they really benefit from that. So I would say, reach out to any one of us, myself, you can go to svb.com and find me on there, or go to LinkedIn, you can find me on there also. And I'm always happy to have a chat and, kind of like introduce you to people within our network.
And say that you saw her on the Founders Tribe panel and use that as a way to make an introduction.
So for me, I actually would like to, I think all the comments Lauren made to founders were great. And I won't really add anything to that apart from the fact that, you know, Goldman Sachs is dedicated to Launch with GS. You can go to goldmansachs.com/launchwithgs to find out everything that we're doing. Sign up to our newsletter. A funny story, actually, we had Andy Davis, who authored the Black Report, record a short video for us to share with our ecosystem. We have an ecosystem of about 12,000 founders, investors, ecosystem builders, etc., across the globe. And, you know, for many people, that was the first time they'd heard anything about what it's really like to be a Black founder. And for me, it just showed that, like, this report didn't just get authored when I started the role. It's been there. But, you know, it takes somebody shining a light on it to allow that message spread. And I think to banking, to the industry, lend your voice, lend your brand equity, lend your networks, lend your capital, not actually lend it, actually invest your capital. You know, organizations, actually corporates, banks, we can't leave this to VC firms alone. We need to get involved because we have the capacity to support businesses at every point of the scale. And it would really be a waste if everybody didn't join in.
And how can those watching today find you?
LinkedIn, my name is here. You can find me on LinkedIn. You can go to goldmansachs.com/launchwithgs, sign up to our newsletter and see everything that we have going on in the ecosystem. But I'm always happy to speak to founders, always happy to speak to people trying to raise their funds. And, you know, we've made public commitments of $1 billion. It was 500 million in 2018. By the end of 2020, we deployed all of it. So we doubled down. And I hope that we will continue to double down, but we won't be able to do that if we're not able to access the best founders and the best funders.
That's awesome. I mean, I really am so proud of the work that both of your organizations are doing to be leaders in this effort and doing the real work, because it's not easy, and showing up. I think we would be remiss if we didn't also give a shout out to Founders Tribe and encourage people to download Founders Tribe. If you didn't see the video earlier, I'm sure that you can look them up, but make sure that you're downloading it, that you're getting active on that platform, you know, because as you saw in the video, it is the Tinder for founders, right? So that you can get matched with investors and others. And I really just thank you both so much for your time today. And hopefully we'll be able to do this again soon.
Thank you, Erin. Thank you, Lauren. Nice to meet you.
Thank you.
Bye.
Bye.
We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with a founder submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are two possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today.
Good afternoon. I believe I'm live. Hi, I'm Unzibe Ufodike, live from the Institute Directors here in London, and welcome to the pitch event. I'd like to invite the other panelists who will be the judges for this segment, if they could please turn on their cameras while we go through the rest of the administration for this session. So we have a panel of judges: Mandy, Ade, Audrey, Andy, Michelangelo, and Bola. If you want to turn on your cameras, that'd be fantastic. Thank you. I think we have a full house. The format for today is pretty simple. We have a lineup of 6 startups who'll be pitching. Each would have 3 minutes to pitch their company, at the end of which I'll stop them. There'll be a timer, of course, and there'll be a 4-minute Q&A session where the judges can ask each founder questions. We'll have each of those founders pitch back to back. So before we begin, if I could just, looking at my screen, I'll go around and ask each of our judges if they could, in one word, say what it is that they look for in a killer pitch or presentation. So starting with you, Bola, please, from Ada Ventures.
Look to really assess the team and the market. Those are the 2 things that I'm most interested in.
Team and market. Brilliant. Thank you. Mandy, same question to you. One sec.
Route to market strategy.
Fantastic. And Ade from Forward Partners.
I'd say efficiency of the team, probably the key thing.
Fantastic. And Michelangelo, Slide VC.
I look for a glimmer of greatness in the founder.
A glimmer of greatness. Fantastic. So without further ado, I'd like to invite the first pitch to the stage. If we can have Dr. Liz turn on her camera, we'll move over to...
Hi, everyone. Unfortunately, Liz is in the PRC at the moment in China and can't access this platform because it requires a YouTube or a Facebook login. So I can cover for her if that's okay with everyone.
Sure.
Or, yeah, if that's cool, I can do that.
That's fine, Xavier. So hopefully you're ready to kick off with her 3-minute pitch.
Yeah, give me a sec.
But before we do, Andy, thanks for joining. If you could summarize in one word or a couple of words what it is you look for in a killer pitch, that'd be great.
Massive ambition.
Massive ambition.
Massive ambition and a path to get there.
Fantastic. So you heard all of that, Xavier. No pressure. Your time starts now. You have 3 minutes to pitch. Thank you.
Sure. Can you see the deck, everyone?
Not yet.
Okay.
You can now.
Cool. Okay, cool. So Mimicry is an advanced materials company developing technologies for the future of infrastructure. The purpose of the company is to develop technologies that are both sustainable and improve the lifespan and quality of construction materials for infrastructure, large building projects, and also for residential homes and things like that. So the problem that we're developing, so our first technology is a self-healing concrete technology that's spinning out of the University of Cambridge's engineering laboratory. And the problem is that concrete degrades. Most repair happens after 5 years, and it's incredibly expensive. The UK alone spends roughly 40 billion on just maintaining concrete structures. As you may have seen in the US recently, there's a massive problem with the way infrastructure works. The way infrastructure is degrading, and a lot of this comes because concrete is inherently flawed, inherently fragile. Further to this, concrete is the most destructive material in the world. It damages the environment. It was responsible for between 4 and 8% of all carbon emissions. And that's just in the process as well as the way that concrete works. And because it needs to be replaced after roughly 20 years in most cases, between the maintenance and the replacement, it's an incredibly expensive and complicated industry. Damaging industry. The solution is a self-healing concrete technology that utilizes a vascular system that both strengthens the concrete itself and repairs any cracks that form. All concrete cracks, this technology allows those automatic repairs without any maintenance from anybody. The business model. So currently we're in conversations and working with a number of large infrastructure projects. We have those as advisors and we're working to develop this. The way that we work is by both prefabricated concrete structures such as railway sleepers, as well as bespoke solutions for large projects such as dams and power stations and things like that. Market size. So in the UK, all construction work is 110 billion, and as I mentioned before, the repair of concrete annually is 40 billion, and it's a growing market. If you see things like the US and China, it's growing substantially all around the world. Competitive analysis. I'm not going to go through all of this here, but the key thing is that Mimicry is no maintenance, allows for multiple healings. It can deal with all sizes of cracks, which other technologies in this space cannot. And it not only repairs the concrete, it also strengthens it from day one. So development traction, we're currently at TRL4. We've developed an ugly prototype. It's validated that it doubles the lifespan of concrete. As well as I mentioned, increases the strength and reduces the fragility. We're also in conversation and working with a number of people on the right-hand side. So here's the team. So as I mentioned before, Liz herself is unable to be here. She's the original inventor of this technology. We've brought on recently a CEO, Arta, who's also from the University of Cambridge.
Thank you, Xavier.
Very quick.
I'm afraid that's all we have time for. But thank you so much. So over to Q&A. We have 4 minutes on the clock, and who'd like to go first? Over to the judges. Thank you.
I'd like to ask a quick question. That's okay. In this industry, it's traditional that you go through a delivery partner, so like a Turner & Townsend or a Mott MacDonald. So how are you planning on getting to HS2, and how are you planning to get into TRL level 8?
Yeah, sure. Thanks, Mandy. So I didn't get a chance to talk about delivery partners. It was a very quick pitch. So through this, we're already in conversations with Mott MacDonald. One of our advisors is the head of innovation and entrepreneur in residence for Mott MacDonald. It's where we're building this process. So there are a number of different ways that we can do this. It's either by developing a prefabricated solution that then adds to the specifications for example, in train lines that need to be, that are very, very crucial, for example, and then we develop in this solution, these prefabricated ones that they may increase the cost, but they will also increase the longevity. So that's what we're in conversation with people like McDonald and with HS2 for example. There are a number of different layers to this, and it's probably not enough time to talk through this right now, but we are either working with the people who develop these, let's take railway sleepers, for example, people who develop these, or we're developing with the specifications people, which is the people like HS2 or the, let's say, Network Rail or somebody like that. And then there's a layer of people in between that, and all of them are in that value chain. The way that we've, got into that and started doing this is by building out this customer advisors that are already working on this, and we're developing everything we do with the end users, end customers, and end decision makers in mind.
Thank you.
Can I jump in next? How you doing, man?
Yeah.
What is the production time compared to the standard concrete that's out there?
Yeah, so the way that it's developed, prior to the actual concrete, there is development time. So there's a manufacturing to build the vascular system. But for the actual construction industry, it doesn't add any time at all because they're already fabricating in a bespoke situation. They're already fabricating. It's just a thing that gets put into the mold, for example. So it doesn't add any extra time to the process. It's an extra layer. And this is already being done with things like fiber optics and different bits of technology that go into a lot of concrete currently.
Hey, Xavier, good pitch, and thanks for that. Question, who owns the IP? So you said that it's spun out of University of Cambridge. Where does the IP sit?
Yeah, so the IP sits within the company. So the technology was developed as part of a PhD and is now being spun out of the university. The university has a stake that's currently being discussed at the moment within the company, but it's looking like that will be low single digits. Thanks, Andy.
We have time for just one more question.
All right, I'll go in then. What is something, since the pitch was so short, what is something that you wish you could have talked about that you think is relevant for us to know?
I'd have loved to talk more about the team that we've got with Mimicry.
It's an
awesome set of team. Liz, who couldn't be there, fantastic, brilliant person, great PhD out of the University of Cambridge. We've also got the head of her research group, which is Professor Abir, who leads the research group, which is the geoengineering research group in the engineering faculty. And then the CTO, Livia, and Arta as well. It's all an amazing team, but Livia's the most senior postdoc researcher in that group as well. And Arta's successful entrepreneur, multiple businesses, and a really great cohesion within the team as well. Just really unfortunate timing that I'm the person pitching and not them.
Thank you.
You got it in the end, and with a couple of seconds to spare. So thank you so much, Xavier, and thanks to the judges for the questions. Virtual round of applause as we invite our next pitch to come onto the stage. So we have Abraham from Go Captain. So if you'd like to set up your screen and your time, your 3-minute countdown starts now. Thank you.
Yeah, hello everyone. I hope you can hear me. Let's go to mine. Can you hear me okay?
Yep.
Yeah, good. So thanks for
clear.
having me. I'm Abraham, founder, CEO at Go Captain. At Go Captain, we are a finance platform providing buy now, pay later or zero interest driving lesson finance to Gen Z consumers looking to save on driving lessons in the UK. Yes, I've just explained that. The next slide is this is how it works. So we have a platform wherein we connect the learner drivers to a third-party lender. We don't currently lend directly ourselves, and we just introduce the learner driver to the third-party lender. The application process takes place via our platform. The user puts in their information. They can then decide how long they would like to split the amount of finance they would like to take to learn to drive. And once this is approved, the funds are then transferred directly back to the driving school, and then the learner driver can start to learn stress-free. This is the size of the industry. So generally, the finance industry is worth over 880 billion in the UK. Driving school itself, 1.5 billion is spent on driving lessons in the UK annually. This was pre-COVID, and 1.5 million, and there are 1.5 million learner drivers each year in the UK. Again, pre-COVID. Timeline. So we launched 2019 of October, so almost 2 years now. We've run a few pilots on our platform. We currently have over 1,000 customers in our waitlist, over 200 independent driving instructors, and we have a third-party lending partner based in Wales. They're a bank, and they basically source the loans for the driving lessons and for the learner drivers. Our direct competitors. So we don't necessarily have direct competitors in the driving school industry per se. We're the first to do this, or we're trying to be the first to do this, but we do have indirect competitors. And as you would have guessed, the likes of Klarna, PayPal, and Zilch. And how our competitive advantage is basically, we want to focus on encouraging responsible lending. So providing lending services to consumers when it matters the most rather than when it's wanted. So the likes of Klarna and Zilch, help you split the cost on a pair of jeans online that you want to buy online, but we want to focus on providing finance solutions when it matters, i.e. learning to drive and enhancing the life of the individual. We also, another huge competitive advantage for us is basically trying to partner with the bigger driving school partners, to basically build trust with them now, so that when competitors do come in, the likes of Klarna, we would have already had that relationship with in place with driving school franchises and instructors. What's changing in the world and why I go captain? So myself and David, my co-founder, are first of all, we're Gen Z consumers. Open banking allows us to.
Thank you, Abraham, for that pitch. Okay. We have run out of time. If I can ask the judges to please ask their questions, I'll start the 4-minute countdown. Thank you.
That's fine.
1 minute.
Oh no, go on. Okay. I want to understand a bit more about the customer desire to use you. So why do customers love using you? 10K MRR seems really decent, so well done. So I'd like to learn a bit more about that.
Okay, no, we haven't generated that yet. We're planning on doing that. So just to be very clear, right, we're pre-revenue. So in regard to, we currently have over 1,000 customers. So I'll just explain why they will use us. We just make learn to drive more affordable and accessible, right? The average cost to learn to drive in the UK is £1,300, and most Gen Z consumers don't necessarily have that to spend, right? Especially after COVID. So we just allow them to actually, instead of spending £1,300 to learn to drive, why not split that between 3, 6, 9, or 12 months, right? And also the average time to learn to drive is 6 months in the UK, but you can also learn to drive under 7 days. And the main reason why most learner drivers don't learn to drive under 7 days is because they can't afford to pay it up front. So with a service like ours, we can actually do that. And
okay, thank you.
That's right.
So I've got a bunch of questions, but we'll start with one, then maybe we can circle around because of time. Michelangelo asked before the previous pitch. So you ran out of time. What was something that you wanted to share that you didn't get to share, just so we have more context, I guess, for these questions as well?
To be honest with you, I think I kind of got through the most important bit, which was basically how the service works and the value proposition. So everything else was just.
Sure. Business model. So maybe I missed it. Business model.
The business model. So we don't currently lend directly ourselves. We behave more like a marketplace platform. So we introduced the learner driver to our lending partners. It's a white label lending service. So the application process takes place on our platform. And whenever a loan application is approved, we then split that 80-20 with the driving school. So for example, £1,000, the driving school gets £800. And then that's 20%, should I say £200, is then split 50-50 between ourselves and the lending partner. So basically we make £100 per £1,000 loan.
Thanks for the pitch. Very interesting, very clear. Probably a good time to raise for something like this as well. One question is, what does growth look like for you? What's the next phase? Because obviously this is pretty straightforward, but if you wanted to take it to the next level, what are you trying to do?
So the next level, definitely for the next 3 to 5 years, the plan is to be able to build basically a finance marketplace platform that basically helps learner drivers, that helps Gen Z, focus on Gen Z consumers accessing and managing their most important finances. So now we're doing this by enabling them to save on driving lesson finance, but then what happens after? They'll probably need to buy a car. They'll probably need to get car insurance. So we want to be the go-to platform that actually helps them do this. And we then do this by plugging into car finance providers, car buying platforms and car insurance providers. So we just want to be like the tunnel wherein we bring learners in and Gen Z consumers in, basically. Starting with driving lessons.
I'll jump in then. How do you need to expand the team? What's your next hire considering this next step that you want to accomplish?
Yeah, so definitely our next hire would definitely bring a CTO on board and a marketing person, also one head of growth to basically help work on the business full time. Myself and my co-founder David, I'm full time on the business, he's part time, but hopefully if we can raise funding, we should then be able to focus full time on the business.
Great pitch, Abraham. Just a question for me. Why did you decide to focus on, because your vision is Gen Z, kind of providing financial growth for Gen Z. Why did you decide to focus on this category? Why did you decide to focus on it?
Yeah, because first of all, we're Gen Z founders, right? So we're creating a solution to a problem we have experienced firsthand. And we feel like in regards, just putting the driving school aspect aside, there are no financial solutions out there focused at Gen Z consumers. And we want to be able to build that platform that helps them access and manage their most important finances, starting with learning to drive.
Abraham, thank you so much. And thank you, judges, for those questions. And a virtual round of applause. I'd like to invite Elena, from HX Lab to the stage, please.
Hello.
So, hi, Elena, how are you?
Hi, I'm good, thank you.
Brilliant. So, you have 3 minutes on the clock and your time starts now. Thank you.
Yes, just a second, I'm just trying to... not really sure how to. Apologies, I've never used this platform before. I'll just share my screen this way. If that's. Can you see the pitch? Just to.
Yes, we see it. Okay. Added another 10 seconds to give you time.
Okay.
Okay.
Apologies, sorry.
Start now. Thanks.
Okay, perfect. Okay, so hi, I'm Elena Chishmidu, and this is the co-founder, Matthew, of HX Lab, and I'm presenting to you the future of brain scanning. Our innovation basically allows businesses to gather insight into the customer's mind efficiently, non-invasively, and also without compromising on the quality of real-time and predictive data. Brain scanning technology allows for real-time testing of subconscious emotions, from anxiety to stress to immersion during any scenario, but due to its recent move from academia to business, the methodology is really outdated and really unsuitable for commercial use. The main limitations that we've seen with this technology include a long setup time between the users, pre-existing knowledge and data analysis, and third-party hiring. And basically, our solution is to remove these limitations through the use of our low-contact brainwave scanning technology and machine learning integration. In short, our scanner is an engineering innovation with neuropsychology at its core, with a focus on the end user, which allows for a quick, non-invasive, and accurate data collection and interpretation. Our technology really beautifully fits into large sectors that really require this type of data and insights such as market research, recruitment, and the creative industry as well. Brain scanning has seen a significant improvement over the past decade, and alongside advancements in neuroscience, engineering, and machine learning, our product really is the next natural step in this industry. At HX Lab, we'll be using 3 commercial models: individual product selling, software subscription, and licensing of both of those, not only in our core markets, but also in our outside sectors. As you can see, the markets are huge and there's so much opportunity and the need of big data over the next couple of years. In comparison with our competitors, our technology really provides unique, real-time, and predictive data, largely done non-invasively and performed in very unique scenarios where the previous brain scanner was really impossible to use in. And also, our team is multidisciplinary, from both of us being scientists to serial entrepreneurs, as well as our commercial and scientific advisors, will make a really good rounded team that will successfully bring this product to market. Currently, we're using a milestone approach, and we have recently secured an Innovate UK grant that will allow us to patent and create the first prototype within the next 6 months. We've already gained a lot of customer traction in the key sectors and are currently and have received a lot of awards for the innovation. And we are currently looking at raising around £250,000 of pre-seed investment to bring us to milestone 7 and reach TRL 5.
Thank you, Elena, for that presentation. Over to the judges for the 4-minute Q&A, please.
Thanks a lot for that pitch. Just got one question, might be a silly question. Where does GDPR fit in and user permission with something like this?
Yeah, that's something we really do think about. And with user permissions, we make sure, particularly at the beginning, that everything's fully informed consent and everything has full permissions, and it's in a usual sort of maybe market research or user feedback or anything like that. It's all written permission, everything fully explained, nothing's taken without any consent at all. It's a key issue that we're really keen on.
How long will it take you to get to market?
We're aiming in the next 12 to 18 months. So in the next 6 months, using the Innovate grant that we've received, we're looking at patenting our innovation and making the first ugly prototype. And in the next realistically 12 to 18 months, we are looking to actually bring it to market.
Hey, great pitch. I'm struggling a little bit to understand exactly how it would actually look like. Can you walk me through how it would work in a real life scenario, like instead of surveying, how it would actually look like?
Yeah, no problem. So we actually want to create a physical product, sort of like a chair, salon chair kind of type. That was kind of our main idea.
Or a movable one.
Or a movable one, where the user would just go in, be as relaxed as possible, not have anything touch or obstruct, and then the testing will be done, and then they can just leave. So they don't have to actually do anything. You don't require anyone to set it up or actually analyze the data. The person can just go in and leave, and depending on the result, is very digestible, and that's the software that we will be using to make what comes out of the data a most understandable and digestible format for anyone with any skill level.
Yeah, and physically, it will most likely just look like a bubble around the head. Super easy to wear and get into. It's
yeah, and it doesn't obstruct. What we've seen with the competitive products that we've used ourselves is that they just make you feel weird, and the data that you get is not very accurate and is not really representative of how you're actually feeling, because you have that added anxiety and discomfort, and that's what we're trying to limit.
Okay, if no judge jumps in, what kind of data are you getting then on the human behavior?
So what a brain scanner can actually analyze is just emotional data. So from stress, anxiety, exactly pinpointed to the second when it happens, why it happens, and what responds to a certain activity or a product it can be. And how it comes back, it can just come back as a report. So in an advertisement, it can say at second 5 to second 10, this user was stressed, or this user was not immersed or anxious, or, depending on the emotion.
Yeah, and it's great for comparing if you're developing a product or an advertisement or anything like that. You can have 2 different versions. You can test them both and see which ones elicit a kind of emotional response that you're looking for.
Very quickly, so who would be the typical customer to use this?
Main customers that we've seen, and recruitment companies, market research companies, anyone that really wants to know how the customer responds.
Yeah.
In the terms of recruitment, we're thinking of doing projects to end bias during interview and recruitment processes. Also with market research, depending on product advertising, that sort of just. Those are the customers that we've seen so far.
Thank you so much, Elena. A virtual round of applause. So we are at the halfway point. and the judges have the unenviable position of having to review all 6 pitches. So while we're waiting, or rather, can I just invite the 4th pitch to the stage? We should have Sahib. Okay, fantastic, you're ready. So Sahib is going to talk us through and facts. If you'd like to share your screen, the camera, rather share your screen, and the timing starts now.
Yeah. Hi everyone, my name is Sahib. I am the founder of Unfacts. We're a market insights platform to help small businesses better understand what their customers want. So there are 400 million small businesses globally, and businesses in sectors like e-commerce are growing at 50% year-on-year rate. However, 60% of new businesses fail within the first 5 years. This is an economic loss of £15 billion per annum to the UK alone. So why is this? The small businesses don't understand what their customers want. They have limited resources internally, so they're not able to fully analyze the market. The internal data isn't representative of what's happening in the wider market, and existing solutions cost thousands of pounds. We've been speaking to users and they mirror our findings in terms of taking months to get nowhere, taking all weekend to go through websites, or in some cases, they've got nowhere, so they've used their university research from 3 years ago to set up a business. So what's the solution? So Unfacts is a platform that provides the right insights to small businesses through an easy-to-use platform. We cut the process from months to weeks. We provide them with access to insights like 5 billion daily Google searches, and as a monthly subscription, our platform is 10 times cheaper than buying reports. So we can look through an example like Joe, who runs Rugged Nature. Through the platform, really quickly, he can find what products he should be focusing on next quarter, and validate his product range as well, so he can see that certain products have 60% more demand than other products. And he can also get a better view of the whole market. Joe right now doesn't sell beard growth oil, but this is something that he can focus on given how much demand there is for it. We've got over 40 businesses like Joe's using the MVP right now, which is in closed beta. We're seeing 70% week-on-week growth, and 85% of our users find our insights valuable. What's really interesting is that the likes of Unilever, Havas, Media Monks are actually expressing interest in utilizing our products. And what's really exciting about what we're doing is we're building a whole ecosystem where we integrate multiple data sources, multiple platforms like Shopify, and to provide amazing insights like benchmarking and competitor insights. And we have a massive global market opportunity as well, of over 12 billion. Our initial focus is on the e-commerce industry. However, the overall market research industry is worth over £53 billion. And in terms of where we've entered the market, there are existing amazing tools out there, but they're all focused on internal data. And internal data doesn't tell you anything about all the missed opportunities. And all the market insights solutions available out there are focused on enterprise. And their data, by the time it gets to report on a desk, is actually 3 to 6 months old. So behind the scenes, we have a team who's really passionate about what we're doing and has a lot of experience with data. Myself, I'm a chartered accountant by profession with a career in banking where I focus on data-driven strategies. As our lead data scientist, we have Dr. Yemi, who has a PhD in data analytics. And he's built machine learning models for LD and National Grid. And as a key advisor, we have Professor Mark Hart, who has over 40 years of experience in building in researching small businesses, and is the academic lead of the Goldman Sachs 10,000 Small Businesses Program. We're raising 500,000 to help us achieve £1 million ARR and market fit. Predominantly, that will be spent on growing the team and helping us get to the next level. Thank you.
Perfect. Our first pitch within time. So thank you, Sahib. So over to the judges for questions. We have 4 minutes on the clock. Thank you.
Hey, Sahib, thanks for the pitch. It was interesting. Can you talk to us a bit about traction, about current traction today? So you say you've got some companies. What are they actually, and what's the business model like? What are they actually paying for? So they're paying, when they pay, how are they using it? Are they consistently using it? Come month 2, what have you seen?
Yeah, so we're still quite early. We only launched about 6 weeks ago, but they're using it regularly. What we're seeing, and they're using it to better understand their market. They're searching different products. They're searching new products they can launch, and they're trying to get to the bottom of what are the good opportunities for them out there. And what the amazing thing is, they can start validating their previous assumptions. So where they've lost stock or not gained any money, now they can see exactly where the market is at. And our data actually proves a lot of their successful products, which is good validation for them on launching their next successful product.
So, sorry, go on, Andy.
So well, I just connect the question. So on that point then, because this is external data, right? So are you putting in internal data as well? So if I see my sales are down, I can then get an overview of the market and see if like search or interest is down in the space as well.
So that's literally the next thing on the roadmap for us, is integration with Shopify, where we can pull internal data and see if it's down, why it's down, and start recommending things as to what you can do to push it back up.
Sure, thanks.
So my question is, my sister runs an e-commerce store, and they use data quite a lot in their business. They rely pretty much on Shopify, and they are quite satisfied with Shopify. So how would you, because Shopify is free, right? So as a small business, every expense, right? Every expense has to be really important for them to spend. What is the 10x value that you're providing as compared to what they're getting free of Shopify or Google Analytics?
Sure. So Shopify and Google Analytics focus on her internal data. So what her existing customers are doing. If she wants to launch a new product, or she wants to find out what products her customers are buying, that's not in her current range, she has no data on that. So we give her that data, that insight to see, okay, where are the missed opportunities in the market? Because for any business, existing customers only bring you so much business. You need to grow your product range, you need to grow your new customers, and that's what we help with in terms of growing the business and pushing it further and further. So that's where the 10x value that she'll gain will be.
So if I may, so an alternative way that she's doing that right now is that they're running ads on Facebook, right? They're running ads on Facebook to be able to source demand. And the scale that the skill that they're able to do is by actually putting the products they actually want to sell and seeing whether there's demand on that. So that's like as grand truth as you can get.
Sure.
How what's your feeling to that? How does your vision compares to that?
Yeah, so it's probably taking her several weeks and several £100s of testing on ads to get to that point. With us, she can have 1 month subscription and find that data within minutes. So she doesn't need to wait and then experiment and find out how the market is moving. We have that data. So she can explore a lot more opportunities that maybe things that she hasn't even thought of. And that's a key thing where we're finding a lot of value from our users. We bring out things that never even occurred to them that are actually on the minds of their customers. So it's a lot more valuable in that sense as well.
We have time for one final quick question, if anyone wants to get one in.
Yeah, just a quick question. Could you just summarize your business in like one sentence?
Sure. We're a market insights platform to help small businesses better understand what their customers want.
Perfect. 1 second to go. Thank you so much. A virtual round of applause. So hey, Ben. Appreciate the timekeeping.
Thank you.
So next, penultimate pitch. I'd like to invite to the stage Jasmine from Ohana. If you can please share your slides. Your countdown starts now.
Thanks so much. Hopefully you can see my page okay. I am Jasmine, the founder of Ohana. Ohana is an all-natural plant-based skincare routine that utilizes the benefits of CBD to put your well-being first. I was diagnosed with MS in 2015, and I looked to slow down the degeneration of the disease. And since then, I have been able to successfully control my symptoms through the use of CBD and a well-balanced lifestyle. Ohana is my way of sharing the lifestyle changes of CBD with others, and offering a daily dose of self-care and the opportunity to put your well-being first. So our original mission is to empower Europe's population of women living with an autoimmune disease with self-care tools, bridging the gap of education between allopathic medicine and holistic health. on my personal journey, there was a lot of contention with my doctors on how I wanted to proceed with some of the disease-modifying drugs on offer and what I would be able to do, and the choices were just a bit tense. So yeah, so since then, what did we do? We came to the market with some innovative formulations. We used formulation scientists to produce 3 really, really great products: the Daily Defense Serum, the Night Repair Oil, and the all-in-one Wonder Balm. Our community have been using this as part of their self-care practice for the past 12 months, and we have been getting great feedback. So why was this an opportunity, and why did I look at CBD beyond my passion? It's a huge market. It is larger than vitamin C and vitamin D combined. It's rapid growth, so topicals are the second biggest growth sector of CBD. As we can see, continued legalization. Some clinical trials for cannabis was actually just gone through, and it's the fastest growing subsector in the wellness sector. However, working with CBD is so difficult. It comes with a multitude of challenges, and we are very, very, very early onto the market. So over the last couple of months, as we've been building our community, what I've been really been thinking about is, are we impacting women's health and the daily lives of people with autoimmune disease as best as possible? Are we really getting to the root of the problem? So from that, and speaking to our community, we have elevated our mission. So we now want to build an app. We want to streamline how we report symptoms in a way that is easily digestible to your chosen health practitioner, to identify the root cause, resulting in a quicker diagnosis and an earlier treatment to improve long-term outcomes. There are a multitude of women's healthcare issues that take years and years and years to be diagnosed. We are really, really being left behind. There are 4 million people in the UK living with an autoimmune disease. 80% of those are women. This is growing 9% year on year. This is an absolutely horrific stat. There are 20 million people in the US living with an autoimmune disease. 80% of those are also women. The market. So
thank you so much, Jasmine. I'm afraid that's all I have time for.
No worries.
Questions, please, from the judges.
Quick question from myself, Jasmine. Great pitch, and love and resonate with the concept. What is your current route to market strategy? And secondly, when is the best time for a client to use your product?
So the best time for a client to use our product will be from first symptom. So as soon as they have a symptom, they will be able to log and track their symptoms on the app and take pictures. So when you actually go to your chosen health practitioner, like your GP, your neurologist, your gynecologist, you're going to be able to actually say, this is my tracking system, this is what I've been experiencing, instead of going to the doctors. So we did a survey on 100 patients and 100 doctors, and the biggest feedback that we've had is that people go to them and say, oh, my ear hurts, but then they're touching their forehead. So the way in which we're conveying our symptoms to our practitioners, there is a big disconnect. So that needs to be some better synergy, basically. What was the other question? Sorry.
The first question was
our route to market. Okay, so what we're really, really good at is being community focused. So we have taken all of this feedback from our community. We hosted our first festival last year and sold out 300 tickets for Ohana Wellness Festival on International Women's Day. Our content and connections and building trust. So we will build up to be one of the recommended wellness apps from the NHS library.
And I'm going to be very cheeky. How much revenue have you generated?
We have generated £50,000 through our skincare routine, but this app is completely brand new. So this is something that we are starting. But however, we've also started it to increase monthly recurring revenue, because through the app, we can get more subscriptions. We can so from the beginning as well, further down the app, further down the presentation was our route to market. So we will set it up from the beginning that it's applicable from each different location. In America, obviously, they're used to paying for that. We have seen the biggest surge in private healthcare since 2008. However, having an autoimmune disease doesn't allow you to get private healthcare. So this is also a bridging gap. So most of the VCs that I've spoken to so far are really looking at how we can pay and how we can increase spending in the femtech space and for healthcare. So we are much cheaper, more accessible, and more content, and we're going to revolutionize women's health and make it better. We're a community that have been forgotten. There is big, massive data gaps. The femtech space, the total addressable market is half the population. We need to be doing better. And as you can probably tell, I'm very passionate about this. So I will let room for other questions. Sorry about that.
Hi, Jasmine. Can you go over the team really quickly a little bit more? You've talked about yourself a little bit, but also about the rest of the team, since there are other people.
Yeah, so we have a part-time PhD specialist from the University of Oxford who is doing a degree on cannabis, as well as a PhD student, for another one from Oxford, actually, just acting as an intern. However, I am a recruitment and headhunt specialist for 8 years in my previous career. We have outlined every team member from every app and from every health and wellbeing app recommended for the NHS, ready to headhunt from those teams to build the tech for us.
Thank you.
Finally, those 7 years of recruitment are going to come into use. Woo!
Hello, Jasmine. Great presentation. I guess could you give some color on your community in terms of how many people you have in your community? How, what's the engagement like in the community? How big is it? Can you give some color on that?
Thank you for that question, but I'm afraid that's all we have time for right now. So, but a virtual round of applause to Jasmine, please. Thanks,
you so
great
much.
pitch. I'd like to invite final presenter, last but not least. Thank you, Vita, who would talk us through semantic intelligence. So the countdown starts now.
Yes, let me show you what I have. Do you see my screen, guys? Hello?
Yes.
So, yeah, thank you. Hi, my name is Vita Sture, and I am the CEO and founder of Semantic Intelligence. And we are building AI-driven IP intelligence engine for the life sciences industry. So currently, there is about 100 million patent documents already published. However, 40% of filed patents from the last year was not granted by the IPO in life sciences sector. And there are several reasons for that. First, it's a high complexity of the pharmaceutical products. There is limitations of existing technologies, but most importantly, they are limited or no budget for small and medium-sized market players to perform good quality IP analysis. So we came up with a solution which is built on our state-of-the-art technology, which allows search, analyze, and extract very complex knowledge in the life sciences field, 83% faster than existing solutions in the market. So for example, scientists can search for entities such as chemicals, proteins, genes, diseases, and it also identifies and maps complex relationships between them. So competition is big and growing, which is always a good thing. However, we have several competitive advantages. One I already mentioned is our state-of-the-art technology, where we combine 5 AI technologies together, and we are currently in a final stage of patenting this method. Second, we're building first industry cross-language engine, which will allow scientists to work in 5 languages simultaneously, including the Asian languages. And also our technology allows us to deliver low-cost access to our end users. So market is growing and big. Our potential customers currently are small pharma and drug discovery companies, academia, biotechs, small startups, and also IP experts. Our revenue, our business model is subscriptions, monthly and yearly based. So we gathered together the best team that we can with extensive experience in AI technologies, life sciences, and also biopharma. So currently we are raising a round of €500,000 for launching our engine commercially in the first quarter of 2022. Our main idea is to get to onboard our first paying customers and also get to the revenue point of 2 million next year. The good news is that we already secured 250 from this 500,000. So I think it's a good news for you guys. So yeah, let's bring equal opportunities for every innovator in the world. Thank you.
Brilliant, thank you, and also within time. Thank you, Vita. So I'll restart the clock and over to the judges. Thanks. 4 minutes on the clock.
Hey Vita, thanks for the pitch. Question: where are you starting customer wise? Where do you want your customers to be? Could you say that the product, and there'll be a multi-language element to it, right? 5 languages. So why 5? And which region are you starting with for customers?
Yeah, so basically our idea is that we are starting with the life sciences clusters here in Europe because we're based in Europe, right? So for example, if we are looking on the life sciences clusters here in Europe, it's combines 6, this association covers about like 6 big clusters in different areas of Europe. And it combines about like 500,000 our potential users already. So it's a very good point where we can start. Also, we have a very good collaboration with AT Health organization, which is also a huge network of our potential customers. Currently, we are working with external sales consultancy, and we are trying to decide should we enter also US market in the same time when we launch our engine, because it's digital product and it's you don't need any installation somewhere. Yeah, so basically, of course, our main market is US market, and we are trying to figure out should we go a little bit slower and start with the Europe, which is a little bit more accessible for us, and we have more contacts here so far. But we are also looking to expand to the US as soon as possible.
Hi, thanks for the pitch. Got a quick question. You said you're looking at 2 million in revenue next year.
Yep.
Where is that mainly coming from? What country or what avenue is it, or subscription or?
Subscription, yeah. So our main business models is subscription based. We are planning to, or like customers will come 80% from the private companies. As I said, small biotechs, pharmaceutical companies, drug discovery companies, and so on. And 20% would be academical organizations like universities and institutes, who is more focused on the drug discovery at this point.
I mean, I would love to dig deeper in the team again, if you don't mind.
Sure, yeah. So yeah, our core team. So I met my co-founders, Alexei and Dimitri. They have, for example, the Alexei, he has been working with the AI technology projects for more than 17 years. I believe that he's the guy, if we need to build something out of AI, he's the guy to talk with. And I'm very happy that he is co-founder of Semantic Intelligence. And Dimitri joined our company a little bit later. However, he's more involved in a hands-on real programming and getting magic out to the real world. And Dimitri has experience in working with AI technologies for more than 7 years. Also, in our core team, we have Chief Product Officer Oscar Villakanas. He actually is a brilliant guy who has experience, who has the education as a chemist and biochemist. And he has experience in working in several companies, actually in AI-driven drug discovery. This is actually the way how we met with him. And so he has both those things. He knows how to build products for the chemistry world, and he knows the fundamentals of the AI. So this is our main core team that's working daily on a project. Yes.
Thank you so much, Vita. A virtual round of applause to you. I'd like to also thank the judges. So also a virtual round of applause to all the judges for having participated in this. If I can invite the judges to click on the link in the chat, that will take you to the deliberation room where you can give final comments and come up with a winner. So thanks, and see you guys and girls shortly. So while the judges deliberate, I'd like to invite Gary Stewart to the stage. And it's been an amazing series of pitches. I've worked with startups for close to 15, 20 years now. And each time I see good quality founders, I'm always blown away. So great selection today. And each founder did an amazing job. Stewart, over to you to jump in and proceed with the rest of the afternoon. So thanks again for
Well, thanks to
inviting us
you
back.
and Zube. You always do like an amazing job. I hope you're sticking around because we're counting on you to announce the winner. I guess you're going to the other room?
Yeah. Oh, I'll go to the other room then. Yes. And then
just remind them that we just are asking each judge to just tell us their top 3 choices, and whoever gets the most wins.
Let's do that. All right. See you all in a few. Cheers.
Yeah. Well, bye. Yeah, thanks. Bye.
My pleasure. My pleasure. Take care. Bye.
See you soon. Bye. Yeah, no, so I guess I'm here to help to pass the time. I guess I'll use the time productively. And first of all, say I think that all of the panelists that we have seen today have been amazing. So thanks to all of the panelists. I think that we've tried to cover the different areas of entrepreneurship and all of the questions that founders, particularly those that may not have the access that they may otherwise want, all of the questions that they might find useful to answer. And so we started on the first panel with focusing on investors. I think we got a lot of really great advice there, from people who really know what they're talking about. I think it was a kind of very honest discussion that focused a lot on the reality that there are structural reasons that kind of explain the numbers that are so disparate for women and minorities and LGBTQ founders, et cetera. I think the second panel was really great in the sense that really delved into kind of what angels are looking for. And I think the key insights that I took away from that is that, angels, at least the ones that we had today, are really looking for people that are somehow aligned with things that interest them. Earlier this week in the class that I'm teaching, we also had the luxury of having a guy named Mitch Kapoor come and speak to us. And so he said essentially the same thing. He's looking for a founder who's passionate about something that he also feels passionate about. So I guess that's the best advice, and to kind of also not be afraid or ashamed to kind of look within your networks to see if there are people there that might be willing to kind of give you that first check. Because, it's probably too early for most founders. And it's also extremely rare to actually get venture capital funding when you're a founder. So it probably makes more sense that you look to more accessible forms of funding, starting with your very own network and then looking to other things like government grants and things like that, even though some of them may prove to be, kind of obscure for the moment. There are increasingly more and more services such as FounderTribes, but there are others that kind of are giving people access to information about where they can get funding that doesn't look like venture capital. Because again, I think someone pointed out, even if you are, kind of a privileged person who went to Oxford, usually a male, it's still difficult to get venture capital funding. So we shouldn't be looking at venture capital funding as the end all be all or the only route to creating a business. There are a lot of numbers between 0 and 1 billion. Venture capitalists looking for the companies that can kind of get to the billion, but for all of the rest, and the other 99%, there are loads of other funding sources. And so we should take those a bit more seriously as well. I think the third panel, what I took away from that was that corporates are doing some really great things. And we had 2 Black women in particular kind of speaking about this with Erin. So we had Shane and we also had Lauren, or Shane and we had Lauren. And I think what I took from that is, corporates have a big role to play in terms of solving this problem about kind of underrepresentation from the vast majority of the population. We can't just rely on venture capitalists to be the ones to solve this problem. And organizations, for example, like Goldman Sachs, are really putting tremendous resources. I think the number was at least $1 billion just on the launch of GS to help to address this issue. And you also have organizations like Silicon Valley Bank that are complementing this by kind of really focusing on the educational and the networking element of it as well, even though they also have some ability to invest in founders. So the answer there is like, don't only look to the venture capitalists, also try and figure out if some of the corporates might be able to answer some of your questions or solve some of your problems. Don't put all of your eggs in the VC basket, which I think is kind of the unfortunate approach that we see in too many ecosystems. And I think this last panel that we saw was we just saw like some really great startup pitches, and we tried to really select companies that reflect the world in which we live. So lots of female entrepreneurs, I think some really great pitches, people that come from different geographies. So it's not always just kind of like one location. You don't have to belong to just one demographic. And yeah, now I'm really excited to see what the judges are concluding. Obviously, I'm not in there with them, so I don't know what they are talking about, but I'm pretty sure that hopefully they'll make a really good decision. But regardless of the decision that they make, just remember this is only kind of like one event. There are lots of times as an entrepreneur that people are going to tell you no, or they're going to doubt your business. That's great for them. You just need to keep it moving. So whatever happens today, keep it moving. You only need to find one investor or maybe a handful of investors that really believe in you. There are going to be lots that don't, but you just need to make sure that you believe in yourself. And I think that that's what's most exciting to me about the panel that's coming up next, which is that we're going to have 4 entrepreneurs from various industries that are going to explain to us how they were able to raise a lot of money in 2 cases. In the first case, I think it's more than $2 million. In the second case, it's more than $4 million, even though they came from backgrounds that don't typically look like the ones that get funded. So in the first case, Chris, who raised $2 million, is from he's Lebanese and he's non-binary. And then we have in the second case a founder, the CEO of Definely, who has raised about $4 million, even though he's a Black founder. And then we'll hear also from Grace, and then as well from Gabrielle. So, and do they look like I did my job? I talked a lot.
Thank you for filling time.
So now I'm back over to you.
So we do have a winner. Drum roll. The winner of the pitch competition is Hannah, Jasmine. So if we can invite Jasmine to the stage. Do you want to say a few words?
Thank you so much. Can you hear me?
Loud and clear.
Oh yeah, no, thank you so much. This is obviously something as I've I thrive with, but I have an autoimmune diagnosis with MS, and just seeing the way in which we are positioned as women and as Black founders in this day and age to really push ourselves forward and help other women around us and help them thrive with their lives. I truly believe in this. Sorry, I wasn't really expecting that, so I was like, I don't know what to say.
No, it's brilliant.
I was going to say, Jasmine, that it was only like I think 2 days ago that you wrote me a WhatsApp and said, "Hey Gary, we're in a chat group together. I forgot to send in the pitch. Like it's too late," and so we kind of saw your.
I know. I just did my deck like an hour ago, so thank you very much.
I'm very passionate
about it, and I think it's really, really important, especially as when we're speaking to men about this as well. It's so important. Ask your parents, your mum, your sister, your cousins, your partners, everyone around you. What do they think of the state of the healthcare system for women, and how can we improve that? And we're so happy for any any feedback. So yeah, thank you so much.
Absolutely. As you continue to live boldly and authentically, you continue to inspire. So well done. Congratulations for winning the pitch. And I believe Gary has another panel to run now. So I'll say my goodbye. It's Unzibe Ufodike signing out. Been a pleasure. Enjoy the rest of the day.
And congratulations again, Jasmine. So I think Petar is going to show the video for one last time today, maybe the penultimate time, and then we'll be back with our panel. We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with a founder submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are 2 possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today. All right, rookie error. So I can think of no better way to end the day than with this panel, because even though I think it's wonderful for us to focus on investors, the real heroes of the entrepreneurial ecosystem are the founders. And I mean all founders, white, black, rich, poor. It's really difficult to be a founder regardless of your race and gender. Only thing I would say is that it's especially difficult if you look at the numbers and you see that people like you just generally don't get funded. If it's a woman, less than 3%, even though you're 52% of the population, or if you're a minority founder, usually it's less than 1%. I think someone gave the stat earlier that women and minorities are probably about 70+% of the US population and receive less than 8% of venture capital funding. So it's tough for everyone, but it's tougher for some people more than others. And so now we have the luxury then of being with a few founders who have been able to, succeed despite the odds, and I'd like to bring them to the stage. First up, we have, let's see the order that they pop up in. We have Chris, who is the CEO and co-founder of Lavender Health, who just this week announced that he's closed a round of $2 million. We have Namdi, who has raised about $4 million to date. And then we also have Grace, who I like to call her Hollywood royalty. And so she's now kind of a multi-hyphenate singer, actress, producer, dancer. I mean, I saw her earlier this summer and she's amazing. And she's beginning this journey of kind of making sure that she treats her artistic career not just creatively, but also entrepreneurially. And I think we're waiting on Gabrielle, but we'll probably just get started in any case. So first of all, thank you guys for joining us. Like I said, you guys really are the heroes. If unicorn founders are the ones that make more than $1 billion. I think founders that get funded while being Black or otherwise diverse are the real unicorns. So thank you for joining us. Let's start with Chris, because like I said, you're the most recent kind of fundraising success story. Why don't you tell us in like a minute who you are as a person, and then probably in another minute or so, a little bit more about your business.
Yeah, sure thing. Hey everyone, hope you're doing well. So I'm Chris. I'm one of the co-founders and the CEO at Troglo. I am non-binary, so I go by they them. And yeah, we just recently closed a 1.5 million pound round, which has been phenomenal with Octopus Ventures and a syndicate of incredible angels. About myself, I grew up in the Middle East, so I guess you can, take away from that, what it may feel like, or what the experience is living in countries where being LGBTQ plus is, quite tough. And so I certainly think there's a lot of privilege in the experiences I've been able to get in the US and then being able to move to the UK. But right now, the main focus is really building this phenomenal company with such amazing people, which is Lavender Health. And it's essentially addressing quite a large problem, let's say, within healthcare, which is that the community faces the largest barriers in receiving care, but they're least catered to. And so we're essentially building a vertically integrated clinic, digital clinic that helps improve sexual health and well-being for LGBTQ plus individuals. I'm super excited to be here. So thank you, Gary, for having me.
Awesome. Okay, let's go next to Namdi. Am I pronouncing it incorrectly, by the way?
You are, Gary. Great. Thank you very much for having me, Gary, and great to be on the panel. My name's Namdi Maifunru. By way of my background, so I used to be a lawyer before I started my business and became a founder at Definely. Been very fortunate that over the course of the last 4 years running this business, I've been able to raise about £3.5 million, which is, I guess, roughly about $4 million. I grew up in Nigeria, so I'm originally from Nigeria. Came to the UK in 1993 following the fallout of the presidential elections there. So we really came as economic migrants here and settled here. And I've always been sort of really inspired by, my parents. They've really sort of given me that early drive, really. And that's what sort of led me to pursue, a law degree initially, and then going on to sort of working as a corporate lawyer. And it was actually during my my sort of venture into law where I practiced for about 4 years. I've always had a entrepreneurial mindset. And, when the opportunity came to sort of look at the way lawyers actually work and realize there was a lot of inefficiencies in the way legal practice is still being done. I set about to sort of at least try and solve one of those inefficiencies, which is what ultimately led to Definely. I have some really great investors who've joined us in this journey. So most recently, we announced a £2.2 million investment, which was led by Microsoft's VC arm M12, as well as a US VC, Cree Ventures. So I feel very fortunate to have not only a great investors around me, but also a really wonderful team. So that's it.
All right, awesome. And so let's go next to Grace.
Hi, I think Gabby's in the waiting room, or the whatever you call it, the backstage, the virtual backstage. Yes, my name is Grace Gibson. I started off as actually a dancer a very long time ago, but I knew since I was 3 that I wanted to be a musician. And I think that when I first started working on music, one of the first conversations that happened was, oh, well, you can't just sing other people's songs. If you want to make any money, you have to write songs. And so ironically, people think like Mozart and all of these classical or neoclassical composers were just like being inspired by the moment, but actually they were all commissioned to write original compositions by patrons and people who were like paying to employ them or for their living or whatever. So as I like looked into the history of original composition in the classical sense, I was like, oh wow, it's not cheapening to say, hey, I want to understand the business of songwriting as well as be a performer, you know, which I think a lot of musicians and artists, they kind of equate an importance on, you know, financial viability to like selling out. And so early in, I realized that that's not the case. And I started to write my own songs. And then I was actually at Columbia University, and I transferred to Berklee College of Music, where I received a scholarship, and I studied pro music, which is covering all the different bases kind of film scoring to songwriting to event production to I came in on voice. So I'm predominantly a vocalist. And then I ended up going to New Orleans, where I started doing my own shows and being a blues singer. And I saw just how the disparity between venue owners and the alcohol industry and the people who are selling the drinks, who are essentially the performers. So I started my first venture called the Culture Crew in 2016, producing events in New Orleans, all of my own concerts, and then my own original music, which we just put out the first song in 2021 March. And now we're getting into what I've always wanted to do, which is putting all those worlds together and making music films. So we had the first music film that we produced under the Culture Crew called River Queen Winters In, which is based on my original compositions. And that's how I met Gary. He actually came to a screening in Martha's Vineyard, a screening performance. We're going to the New Orleans Film Festival. We were just at Martha's Vineyard African American Film Festival, Pan-African Film Festival of Cannes, Rhode Island International Film Festival. So I'm really seeing what we can do with a small startup in the world of creative economy, you know. And I also founded Rock Noir, which is my newest baby that I've been working on for a long time, which is a genre, community, and movement based on the Black roots that created, sustained, and continued to revolutionize rock and roll. So my name is Grace Gibson. Nice to meet you.
Awesome. So a very kind of varied panel. So maybe let's start with, let's go back to Namdi. Tell us a little bit about kind of like your journey from being an immigrant kind of to going to a law firm. I think you were at Freshfields, so now you've made it, to then all of a sudden deciding, oh, well, it doesn't make a difference that basically like no Black people get funded in the UK. I think the numbers are something like there's been one Black woman who got funded in the UK in the last 10 years. And that there have been like 38 Black people more generally that have gotten VC funding. So I guess 37 Black men that have gotten funding over the last 10 years. Why did you just say, okay, well, I see that, I hear that, but it's all good. I'm going to quit my job and try and do this entrepreneurship thing?
Yeah, I mean, it's a great question, and really the numbers are staggering. It certainly doesn't make for sort of something that entices you once you sort of hear the numbers. And actually, maybe had I been more familiar with the numbers, I probably may not have left Freshfields, right? I think it was only after the fact I realized how bad it was. But for me, I think I've been, as I said, I've been really fortunate to growing up. I've always had people I could look up to and who've really encouraged me to really be able to do whatever I want. I think in my household, one of the things I was definitely taught was, education and, just being ambitious and being, resilient. And I think I was lucky enough to learn that early on. And I think that really sort of set the path for my future education and then career path. I remember when I finished university, I only wanted to work at a Magic Circle law firm, Freshfields being one of them. For me, it was like, if I didn't get into a firm like Freshfields, then I was just going to wait and keep going until I did it. And I was lucky enough to do it. And actually, I did that I think it was my second attempt or my third attempt that I eventually got there. So that sort of really gave me that sort of early sort of resilience early on. When I was practicing as a lawyer, I enjoyed it. Law is not for everybody. I certainly enjoyed it for a bit, but then I realized that I wanted more. I've always had this, as I said, entrepreneurial mindset about me. And actually, interestingly enough, as a lawyer, you're sort of taught to mitigate risk and avoid risk, because you're always sort of advising your clients on how to protect them and guard against risk. But I've always thought I've been slightly different to the normal sort of legal, personality. And I was fortunate enough to actually meet somebody during my practice, so someone at Freshfields, my co-founder, who had a visual impairment actually, and I set out to solve a problem for him. So it was actually a really interesting journey, because I set out to essentially create software that solved a problem for somebody who had a visual impairment. And it was only when I created the prototype of that software, I sort of quickly and instinctively realized it could apply to everybody, not just himself. So I then set out to grow this business and work on this full time. In terms of the funding landscape, it is hard. I'm not going to sit here and suggest that it was easy. It definitely was not easy. We spoke to a lot of investors, a lot of VCs. We got a lot of no's, a lot of rejections. But I think, one thing law certainly taught me is just having that, thick skin, that tough skin, not taking, if one door shuts on your face, find a window, go to the back door and see if that's ajar and see if you can get in that way. You just have to, have a thick skin and just keep going, because I think you need that to really go and make any progress from an investment point of view.
Perfect. And I think we just had our last panelist, Gabrielle, join us. She is the CEO and editor-in-chief of Meth Eater magazine. I hope I'm pronouncing it correctly. Gabrielle, thank you for joining us. Sorry about the difficulties you had kind of getting in.
No problem. Thank you so much for having me. My apologies on the difficulties. I actually moved to a new apartment, so my Wi-Fi is brand new, so it needs to be troubleshooted. But I appreciate being here. So thank you so much, Gary.
No, awesome. Well, I mean, one of the things that we did before you came on is we just asked for each person to give like a 1-minute introduction to who you are, and then a quick introduction as to your business.
All right, I'll go right ahead. Hi, everyone. My name is Gabrielle. My business is a multimedia company. We are mostly on digital, but we are looking to move in other spaces such as live event and a bit of print, even though my predecessor said not to go there, but I love it, so I want to try it. We are based in New York, moving to Atlanta. That's hence the new space down here. We are focused on Gen Z and millennial. I actually met Gary through Grace, who was on the cover with her amazing mother for Mother's Day. We focus on the LGBT community, Black girls around the world, and of course, Black men and people of color. We are, of course, mostly based in North America, but we have some great audiences internationally, such as London, Paris, Lagos, and Cape Town. The goal is really to be an amazing representation of the culture and be recognized as such. I'm actually partners with my mother. We started it back in 2012 when I was in college. And we are cash positive, and I'm very happy with how things are going. So yeah, that's a little bit about the business.
No, awesome. So I'm going to come back to you, but I guess next up, I'm going to ask Chris, same question. I guess like being kind of, Lebanese and then kind of non-binary, there's still kind of like a lot of homophobia in the startup ecosystem. I think numbers are there as well, that like less than 1% of LGBTQ plus founders kind of get funding, and something like 23% are actually hiding their sexuality in the funding process because they know it can be a barrier to what can sometimes be a very kind of like bro finance sector approach to investing in startups. So what was your experience like?
Yeah, thanks, Gary. Yeah, those stats are, from Bridge Cook. I'm pretty sure the numbers are higher. It's like pretty crazy. Like as it is, like if you think about fundraising in general, like the barrier is quite, like thick to kind of move forward to the next step. And then if you add that other layer of complexity, which is, being a part of an underrepresented group and identifying as your non-traditional founder that is raising and being open about it is kind of, extremely difficult to do. So it's multiple layers of challenges that you need to overcome. And I think when we first started raising back in Jan, I certainly, wasn't adding my pronouns, for example, which was like one of the main things that I found challenging during this process, is just having to introduce myself and correct individuals when needed. And so that the misgendering side of things certainly plays an element to it, and it's just coming into those meetings with somebody, assigning their understanding of what that means to them, rather than being more attuned to the needs of diverse founders. And so I think there were a lot of challenges along the road in speaking to large funds that were interested in sexual health in general. I think explaining the concept of the need for the career health, the challenges, questions that were asked during the process, I think went to everything from, this market's not really big enough, or I don't really understand the problem. Aren't people within the NHS and clinicians already trained? And the questions that are asked, I think, partly are due to ignorance. Perhaps it's just some part of it is certainly discrimination. So I do think it was a challenging process. But over time, what I did was mentally reframe, which is essentially, if this investor is saying, hey, I feel more comfortable investing in your company if you cater to the wider needs of anybody who's sexually active, that's essentially saying, hey, I'll invest in your company if you change, what you're aiming to achieve. And so we actually walked away from an entire deal that strung us along for 3 months, and we could have closed this round in basically a month. And we walked away from it because of that. I think it's important as founders to remind ourselves that we're giving up a part of our company, something that we want to exist in this world. And so we really shouldn't be compromising on values. We shouldn't be compromising on who, gets a stake in your company. And so I think keeping all of those things in mind whilst you fundraise is so important to optimize for success, because these people are likely to be on your board. They're likely to be on the journey for the next, however long it takes to kick it off and until exit or other. But I think those are such important parts to weigh in is who do you want to work with, and don't compromise. I think those kind of were my 2 takeaways. From a background ethnicity perspective, I don't think I struggled as much. My accent is not a heavy Middle Eastern one. Although I did grow up there for 20 years, I was educated in American high school, and so that element didn't come into play much. But yeah, that's kind of my take, but happy to answer in more detail if you have any further questions.
I'm going to ask you and Namdi a question before I go over to Grace and Gabrielle, because they had very different experiences, which is, did you find it easier then to kind of go after investors that kind of shared some sort of an affinity with you, like Namdi go after Black investors, immigrant investors, or Chris go after gay investors? I know we share an investor, which is Gangels. Also I know that maybe some of the investors you've spoken to have themselves, the partners have been LGBTQ, which then meant there wasn't this need to maybe explain as much, or is this a real problem? Tell us a little bit about kind of how did you choose your investors, or in reverse, how did your investors choose you? Let's start with Namdi.
Yeah, I think for me, certainly my very first investor, and actually one thing I will encourage everybody to do is, look at your network. When I first left Freshfields, I sort of went through, I guess, probably a very typical process. I thought, hey, let me try and see, who in the world is going to come and invest in this idea I had. And I signed up for various sort of, angel, investor sort of, programs, and, paid my money, and I met with various investors. And actually, I think we shortlisted 2 investors who we had various meetings with, and they agreed to invest. But actually, at the end of it, we realized that they wouldn't be a good fit. I realized they wouldn't be a good fit for this company. So I actually ended up saying no to them. And it was actually when I said no, and having gone through this process, I think that process took about 3 to 4 months. I was back to square one again. And I thought to myself, man, I've just said no to this really, at the time it was only £150,000. And, I had said no, and I was back to square one. I was like, what am I doing? And what I decided to do was just go back to my network. And I went back to my old boss. And I sent him an email. Within 30 seconds, he responded saying, yeah, why didn't you ask me? You know, it sort of really taught me about actually, you know, do not underestimate the power of your network for that very first money into your company, because it's still an idea. People are trying to back you as an individual. Your concept is nothing other than a concept, right? And you know, you haven't really achieved any traction. So who's going to believe in you more than people that know you? You know, people, your family members, your friends, people, your colleagues that you've worked with. So certainly do not sort of underestimate the power of that. And then as you sort of make more progress, then it's more about, okay, what traction have you achieved? So now sort of having people like M12 and Crevet VC on board, they're looking more at the traction and sort of the market opportunity. The conversation gets a little bit more sophisticated. But I think when you, you know, and it can, you know, some of them can be strategic. So M12 for us, you know, we started our software as a plugin to Microsoft Word. What better investor in the universe of investors to have than Microsoft, right? So we felt really, really lucky to have them on board. So I think when you first start, certainly don't be shy about, you know, asking people, you know, people in your immediate network to just give you that first money you need to build the traction that you require for sort of the more professional investors later on.
Good advice. Okay, so let's go to Chris.
Yeah, I think when it comes to the raise itself, like, is it more about investors not getting it, or is it about getting them to care about it? And I think like that's one that I struggled with a lot. I think for us, you know, talking about the problem and explaining how underfunded it is for the community here in this part of the world was certainly challenging, because the numbers aren't really there to back it. So pitching to investors, initially I 100% like was starting to go on like AngelList and prospect LGBTQ plus investors or companies in like Hornet or Grindr, and just kind of reverse and say, okay, if these founders who are openly queer have raised money, then maybe that's a way that we could understand what worked for them and what didn't. And so a lot of energy was spent on pursuing LGBTQ plus investors, and there are not that many. And so we hit a wall. We definitely did raise like a safe note with you know, the investor that we share in common, Gary. And so I think getting support at that early stage did kind of, you know, boost us forward from a confidence perspective, and like, you know, someone does believe in what we're building. And then two is really, okay, what do we do from here? It's clear that targeting our own community isn't really progressing the fundraising process. And so I think it then just became more about really identifying if there was a unique or a unified message for why investors were saying no. So as you can imagine, like hundreds of calls, tons of no's at the first call, tons of no's with a justification at the like third or fourth call. I think you just need to really see what is the core challenge there. And for us, it always came down to market size is not big enough because you can't justify it because the data is not there. And so the entire process was not the best use of my time. I think after shifting from we're going to like LGBTQ plus investors to we're going to investors in healthcare, that's when things started to change. So we went, you know, straight towards the top tier healthcare funds, social impact funds as well. And we didn't end up landing capital from, you know, VCs or angels that were very like impact or social good driven. But what seemed to resonate with healthcare investors is the fact that the system is broken, but it wasn't really about for the LGBTQ community. It was just like the healthcare system needs to be improved. And so the way I was pitching it, if I removed like 3 or 4 slides, it wasn't really about the community and the struggles. It was more about this is a problem that exists within the public health system in the UK and more broadly for Europe. And then painting that picture of this is how large it is, but then let's actually take a look at the numbers that exist for LGBTQ plus individuals, where you have like 1 in 7 that are mistreated, 1 in 8 for no healthcare, 42% of transgender individuals are mistreated, and that cycle that creates itself. And so that entire process was extremely difficult to convince people that this is something that needs to exist. And the way that we locked in our lead, which I think was when everything shifted, was the simplest thing. It was LinkedIn. And I saw a post by the principal at Octopus Ventures, who essentially was saying, I'm struggling to start a family, or I'm looking for family planning solutions. And there are companies in the US like Folks and Get Plume, who have also just recently raised jointly something like 50 million. And so that was a massive signaling factor to let's call it queer tech or technology solutions that should exist for this community. And so after we got that term sheet, a lot of investors now wanted to participate because a tier one fund was interested in what we were building. I question how much of it is you now understand the problem versus somebody has now said, this is your term sheet, we're going to give you this much money, and then everyone else has now drawn interest. But then from that moment, we built an entire group of syndicate of angels, majority of which are female, and I think we have tons of LGBTQ plus investors as well. So it seems to have, evolved in that way, which I'm really proud of. But I do think it was, certainly challenging, and not having somebody from within the community who truly did understand the problem. I'm not entirely sure if we would have raised successfully or if it would have taken longer. So I'm actually quite grateful that somebody in VC was open about their sexual orientation and shared the same struggles, but then also went the extra mile in explaining the problem to their colleagues, which I think was equally important, is having a startup founder pitch the problem to VC versus a VC on the same playing field with other VCs having those conversations, I think does start to shift the dynamic a bit. And so I'd love to see more of that happen for future founders.
Awesome. And so now we're off to Grace. Gabrielle might still be having some connectivity issues, but Grace, you're in a whole different space. I mean, in some senses, it's the same space because from what I read, the term angel investor actually comes from people in Hollywood investing in films at the beginning. And then I guess eventually they went on to tech companies in some cases. But what's your experience been like in terms of trying to finance your, entrepreneurial ambition? I think creative people are entrepreneurs. I mean, you basically have to you're the product, and you then have to monetize it. A lot of people choose to go a more corporate route, which is well, let me just get the record label to pay everything, and they'll make 99% of the money and I'll take 1%. But then you have some people who are more entrepreneurial who say, no, actually, I'll take the risk and I'll do it myself. What's that like? And how do you get funded? I think you're on mute. You're on mute.
I would say that the biggest risk in taking that risk is time. And are you willing to sacrifice your time? And as a woman performer, I look back and I wonder some of my decisions in keeping that independence. Was it the wisest decision? When you say 150,000 pounds, Namdi, that you were offered that first time, I was offered 150,000 euros, when I was 19 to sign to a French record label, because I'm also bilingual and half British. And I didn't, and I said no. Do you know what I mean? And then in turn, when I was shopping a record label when I was 19 in France, I got someone that I knew who believed in me. They actually said, here, I'll give you 5,000 pounds. I mean, not pounds, euros, which, for the dollar, we were when we brought it back to America, did a little bit more. Thank you, Jesus. And, you put together your package and you come back here and see what the offers are, because essentially a label that I was interested in at the time, when I was interested in that world, had said, come back with a package. We love you, but we need to see what happens, come back with a package, put out a video, see what the response is. So we did all the right things. And it was a really good first entree to me into, I guess, that spirit of entrepreneurship, because I basically went into a meeting with this finance company and it was in French, and I was working with this French guy at the time, and he was like, you know, elle est comme un yaourt, on doit le vendre. And I was like, whoa. In French, that means, you know, Grace is a person, but elle est comme un produit, like she's like a product, she's like a yogurt. We gotta sell her. And I was like, hold up, un yaourt quoi? Je suis plutôt comme un diamant. I was like, a yogurt? No, I'm more like a diamond, okay? So it was very interesting, you know, being 19 in another language, in another country, having to advocate for myself. And then in turn, in that meeting, when he heard me speak on the business aspect of like Grace Gibson Incorporated, that he took me seriously enough to say, let me give you 5,000 euros and like see what you do with it. And we did all the things with it. And what it did was give me a great starter package. When I came back to the States, you know, I was working with producers and labels and all this stuff to be able to present to potential investors or labels or what have you. Hey, here is what I can do with very little. What are you willing to do? You know? And in the long run, I decided to actually continue to invest in my education and go take that scholarship to Berkeley and like learn more, because I felt like things were coming too easy. And I didn't really bring enough to the table to understand what was my value and how am I going to be irreplaceable. And I guess like one could not, I guess non-fungible, like you can't copy me, you know? And I knew that I needed more knowledge. So I decided to continue to invest in myself, which I think in the creative realm is like a really important thing to do. In that I was speaking actually to my cousin. I was just in London, and he runs a venture capitalist firm in the tech world. And I was like, okay, bro, tell me, what do I need to, if I go into a meeting and I need, and what is going to sell me on you? And he said a bunch of stuff. But the thing that I really took from it was that the idea can't be easily copyable. And because, you know, then he could just take that, or someone else, if he invests in it, someone else could easily be inspired by it and do something different. So I think the same thing goes for in the creative realm. I really decided to continue to invest in myself. And I would say that I've actually had a lot of luck. I've been very blessed in the space of patronage. And I think that is an old art form that when it comes to creatives, that has been forgotten to a certain extent, that the, you know, Thelonious Monk, that Miles Davis, that even Jimi Hendrix, that some of the biggest rock stars throughout genre, whether it be from the classical realm, the neoclassical realm to rock and roll, had patrons. Because even if you're looking at the way that the record labels are set up, or even if you're looking at the way the entertainment industry is set up, you know, they're not getting that check right away. And they need to have support to be able to be creative, to be able to have shelter, space, home, so that they can do their job and output content. So I was really blessed in that I put together a pitch saying, hey, I need $30,000 to do what I got to do, to own my music, to put out these visuals, to get a team so that I can do what a label would do, because essentially a label is going to put a lot more than that behind that so that you can be creative. That's what it should do. And I was telling people like, I need $30,000, and I was giving my little presentation. And just as both Chris and Namdi just said, is like, look at who you know and who understands you. And this person who really believed in me, named David Black, may he rest in peace, just said, listen, I'll do it. You know what I mean? And it wasn't $30,000 at once. What he decided to do was invest, like, this is your monthly budget. You can get an intern, you can get, you can be paying your producers your studio time, do all this stuff. This is what I can do monthly for this amount of time. And it was very liberal and non-business-like and very familial. And he was just like Venmoing me stuff. And then I would go put it to work. And then I would show him what I had paid for that month and the products that we had created. And through that, and I'm not going to get emotional, is how we have River Queen, you know, David Black, and, you know, believing in me and saying, you don't need to split your focus, like focus on writing this film, focus on this music, and I will be, you know, I will be a 15% owner in the culture crew, but he was so giving in that he was like, listen, if you want to sell that person, we'll figure it out. He just wanted me to get it done. And I have to just speak on the art of patronage as far as like that being a forgotten lost art in the non-official funding of creative founders, and what like Thelonious Monk, again, Jimi Hendrix, a lot of the jazz heads, like we wouldn't have them if there weren't people who were consuming their music and living off their music creatively and saying, you know what, I believe in this so much that I see that the way this industry is not fair. You're not getting paid what you deserve. So I'm going to help you do your job. That shouldn't be the case anymore. And that's why I've decided to stay to stay independent as long as I have, because I think that there needs to be a larger conversation that for decades, patrons for hundreds of years have been keeping the entertainment industry afloat, because the entertainment industry itself is not giving the money back to the creators as much as it should. So over and over and over and over again, we hear the story of amazing creatives who have created billion-dollar products. Let's just use the example of Big Mama Thornton, who was the original singer of, in rock noir. I have this whole docuseries I'm working on, and I talk about Big Mama Thornton and how she did Hound Dog. She was paid $500 for that song. That song was then handed off to the king of rock. And he then created a $4 billion industry off of Hound Dog alone. So that disparity between like the value of the products that are being created, especially by Black creatives and women creatives, and then what they're getting in turn, is the age-old story that's so boring. And what I would like to do is recreate that narrative in saying that there's a way to have ownership over your music and get what you deserve, like get them billions too. But that's what I'm looking towards. I hope that answers your question. I was like kind of
No. I mean, I think that like that's part of the reason that I wanted to bring you on the panel, because I think at the end of the day, like going back, you can start to think of like angel investors for startups as kind of like patrons as well, right? In a lot of cases, they don't really ever expect to get the money back, but they're kind of like mission aligned or driven. And so even if they don't get the money back, they kind of really want to support a cause. And like what people were saying on the angel panels we did before is like, the company usually has to kind of reflect their values or their aspirations in some sense. And so again, they are super okay with losing the money. In fact, you shouldn't give money as an angel investor that you can't lose. It's more about it's just been called something different, to make it look like more businessy. But like, I think it is kind of a form of patronage, just kind of with a contractual return on investment kind of already kind of locked in. But yeah, I think that's really interesting. And so Gabrielle, I kind of want to talk to you as well, because I know you're having some technical issues, but one of the stats that we talked about in the panel with Goldman Sachs and with Erin was that the traditional kind of like Black female founder gets about like, let's say $40,000 in investment, even if she's successful. Whereas the traditional kind of like the typical non-successful, unsuccessful white male founder will get like $1.2 million, right? So there's this huge disparity that was kind of reflected or revealed by Project Diane, I think it was. I think you're kind of like, potentially an example of that, because you do have a very successful business, but it just hasn't been funded by external sources. Tell us a little bit more about like, how did you do that? I mean, obviously, if you can create a business where you don't have to give away any of the equity to anybody else and still have all of that for yourself, that's the best of all worlds. But how did that happen in your case?
Oh.
All right. I guess the question was not answered. We'll wait till she comes back.
Well, but as you wait till she comes back, I want to say one more thing.
Yeah.
Which is that listening to what y'all are doing is very similar to pitching a show, and I've been in the process of pitching my first show, and it's been very interesting. You know what I mean? Just take the business and just put it into like a concept of a show, and then you're going back and forth with, is this valuable? Is this the right fit?
Well, it's all the same thing, because at the end, when you were talking about like being given $5,000 to kind of prove yourself, that sounded to me like what we would call an MVP. You have to come back. The investors, you're calling it a patron. We call it like an angel investor. Pitching, as I was saying in my class this week, it's all the same thing, the same concepts. Like in Hollywood, you would call it like a loggerhead. What was it called? Like a silver bullet, and there's another one. log line, and that's the kind of 1 to 2 sentence description for a pitch. It's the same thing in startup world. So it's like a lot of the same practices kind of like exist in both spaces, and they're probably related. It's just that like we've called them different things. And what I think we should do is we start to kind of just call them the same thing, right? Because particularly when you look at like minority communities, a lot of the most successful people in like, let's say, for example, the Black community in America have been artists, right? And then they become entrepreneurs later when someone explains to them how business works, right? So you can become like Oprah or Jay-Z or, Rihanna. You know what I mean? Those are the ones that become the billionaires. And I guess I'm saying like, it'll be better if we taught people all that stuff earlier so that they could kind of like figure it out earlier. You know what I mean? Like, because we have a lot of people who have a lot of great talent, but right now I think people think in certain communities, it's easier to be a rapper or a basketball player than it is to be an entrepreneur. And I think that we kind of want that to change. Like, maybe you can do both. But while we figure out, maybe we'll have to do a separate session with Gabrielle, because I think it's a little her internet is a little too dynamic. So maybe what we can do in the last few minutes that we have together then is we're going to go around and, each of you in different domains, different, challenges. We have a Black creative woman, Black British kind of, legal tech entrepreneur, a non-binary kind of Middle Eastern kind of health tech entrepreneur, but there are like a lot of similarities. So maybe we're going to go around. You guys can just tell us in each case, like, what would you've done it. You guys are these like anomalies in terms of being able to kind of be a success case where there aren't too many. What would your key tips be for other founders that might look like you, that kind of want to follow in your footsteps? What are the three, let's limit it to 3 key, takeaways? Let's start with Nnamdi this time.
Yeah, Gary, just one thing. I use Nnamdi for a purpose. I'm certainly African before I'm British. So I guess my 3 key tips. I mean, something that's really worked for me is just trying to find a great team. Really, I cannot emphasize how important it is. This journey is lonesome, certainly at the outset. If you're fortunate enough to have people to come on this journey with you, you've got to make sure that, you really find really incredible people that work for you. So I've been really lucky to have some incredible teammates and colleagues, not just my immediate team, but also advisors as well. So I think that's the first thing. The second thing I would say is, you don't need to wait for your product to be perfect to launch. Certainly I did my first pilot with one of the biggest law firms in the world, and it wasn't ready. I knew it wasn't ready, but I wanted that iteration. I wanted that feedback. I wanted that loop to be quicker. I didn't want to wait 3 years in a lab building and then say into the world, here it is, and actually it's still going to have problems anyway. So don't be afraid to get that product out before it's ready. That's the second thing. I guess the third thing is, like I said earlier on, this is a long and lonesome journey. It's a long and lonesome world. You're going to have to make sacrifices. I had to make a lot of sacrifices. Past the age of 30, I had to move, give up my very nice apartment and move back to my parents' house. And I went 3 years without a salary. I had, very minimum, funds in my accounts and had to take public transport everywhere. Like, there's a sacrifice I had to make from being a corporate lawyer to basically going back to square one again, as I was still a student. But at the end of it, if you really believe in what you're doing and you're certainly driven, it will pay dividends. And for me, I'm very, very fortunate about how things turn out.
And so one question I wanted to ask you before is, what did your parents say when they were like, we came here from, Nigeria?
You know what, Gary, in Nigeria, you're either a lawyer, a doctor, or an engineer. So I was lucky enough to be a lawyer, but more so my older brother, he's a brain surgeon. So when you have a brain surgeon in your house, there's not much I could do, really. They don't really care about me, to be honest. I'm just here. Whatever I do is, it's an extra bonus. So they've already got their success story. So I was very lucky in that sense.
No, but I know the pressure. Like when you say I'm moving back home, I mean, I haven't had to do it, but like I can imagine the pressure of saying I'm moving back home, and they're like, what is going on? So how did you overcome that? Because I guess a lot of founders, that's usually it's the family. I said that is like the biggest obstacle. It was Linda Rottenberg from Endeavor. She was like, the family members a lot of times are the biggest kind of dissuading force, because they're kind of trying to protect you by saying, don't be stupid, you're going to make a big mistake.
Yeah, no, absolutely. And I've definitely heard that. I think I've been very lucky. From the outset, my parents have been very supportive about everything I wanted to. I gave the story about earlier on about when I wanted to be a lawyer. I only wanted to trade and work at a Magic Circle law firm, and that was me willing to say, hey, I'm not going to be employed until I get that right. And they were willing to be patient with me. So I've been very lucky to have sort of very supportive family and friends, and the network around me. I know that not everybody's going to have that. I do appreciate. I'm not trying to sort of say everybody's going to have the same sort of support system and network than I did, but I was very lucky from my own sort of point of view.
Awesome. All right, Grace, what would your 3 tips be to anyone? We always hear the expression "starving artist." I think those were the original entrepreneurs, the people who believed so passionately in something that they were willing to kind of forego like normal or typical jobs because they had something creative inside of them that they needed to have be born. What would your 3 tips be for like people who kind of want to follow in your footsteps with the learnings that you've made?
Get hungry. Get hungry. And eat. I don't know. It's a lot. Every day is a different damn day. All the things he talked about, I did. I'm it's a lot. I don't even want to get into the non-glamorous aspects of it and what that can do to you. Because there's a huge contrast in the glamour of performance, but the grit of entrepreneurial enterprise. And so having to go in that room and feeling like a freaking loser because you put everything into this and you gotta like, jazz it up. It's a lot. Like, it's not for everyone. Honestly, sometimes I'm just like, you know what? I'm fine. I don't really have anything I need to say. I don't need to be intentional or make music that's going to be classic. Just give me the check, give me the contract, and send me on my way. Those days happen for sure. But then there are the days when everything works out and the moments and the eras. And I think that I'm kind of on the precipice of that now, of just seeing like the different working pieces of like 10 years of work kind of line up and see that they're making sense. I would have to say that one of the best pieces of advice was super simple that I got from my friend who's like a top award-winning high art photographer in Berlin. He said to me with very bad grammar, he's like, you gotta want, I was like, so what'd you do to do all this? He's like, you gotta want it better than anyone else. And those were his words. And they always come back to me. It's the simpler things that come back to me, because one, you just can't give up. I think that's what it really comes back to. It's like, you just have to make that decision that if you're going to do it, you can't give up. If you want to do this, because this is what I do, and you've seen some of my performance and stuff, it is like a whole body dedicated experience. Like it is everything. Like I'm just putting all of it in there. You know what I mean? And I could give more. I would have to say that the rule in my household, because I come from a household of artists, is if you the only way you can do this is if you can't breathe without it. So don't do this because it looks fun. Because honestly, like, it's not. It's not fun. It's hard work. The fun part is oh yay, we just did the show in the garden and now we can have some rosé and all that. And I enjoy it very much so. But if your form of fun is hard work and grit, and I don't look at it as a sacrifice because I love what I do, then don't do it because it looks glamorous. So the number one is I forget, but number two is if you can't breathe without, only do it if you can't breathe without it.
And
what were we gonna say?
No, go ahead.
And then number three, I would say is remember this is what you wanted to do when the times are tough. Like, remember this is your dream. And just get used to it looking different than exactly how the outcome of the dream. I think those are the three things.
Yeah, no, I think it's pretty spot on for a lot of entrepreneurs as well. It's kind of like you have to be passionate about solving the problem, because if you think the 15-year journey that it takes and the 90% failure rate are going to be fun to navigate, then you're probably doing it for the wrong reasons. You have to do it because you cannot not do it. But let's hear the last words from, I guess, probably the youngest, Chris. What are your kind of 3 takeaways for anyone that want to follow in your footsteps?
Yeah, I think, as a base, I think we need to recognize, like, as founders, like, there's, it requires like an endless pool of grit, energy, confidence, optimism, and passion, while equally like enduring, the expectations and the pressure to perform and attaining that self-fulfillment, because it really goes back to what do you want to build, and if it's something that matters to you, and that, to Grace's point, then that is like where you should derive like some element, if not all of your strength from. I think the 3 takeaways I would give, the first would be, your standard grit and determination. Like, do not stop till you get there. Do not stop until your job is over, until you've reached that finish line, whatever that, you define as complete. And if you've started something, if you started the fundraising process, or you're about to start, it's going to be tough. Recognizing that and knowing it's going to be difficult is the first step. And whatever the outcome is, I think it's good to know that irrespective of what happens, you're already paving the way for generations to come. And I think that within itself is also quite, I would say, like, it's quite nice to think that that plays an element in carving out what it's going to look like for others. And I think with being a part of underrepresented group, whether it's like, your sexuality or your gender orientation or whatever it may be, I think we already have ingrained in us this tolerance for rejection. And I think building on that and having a thick skin is only going to help us even more. Because having someone tell you no over and over and over again either makes you question that something's wrong with you, something's wrong with what you're doing, or like this is just not working. And I think the second piece of advice would be build a really strong support network. So same as, what you said, Namdi, which is, you need to find those people that you can go back to and kind of think of which family, friends, or mentors can you lean on for that emotional support. And that's kind of your safe haven when you want to lick your wounds, recharge, and then go back into the battlefield. So find whatever source of strength is for you, because that will help you through the entire process. And the third one is do not compromise. Like, don't stop till you find the right people you're comfortable with working with in the long run. Just don't compromise. And I'll actually finish with a quote that my mentor and really good friend, Angelia Muller, once said, which is the fact that you have to think of your cap table as who you want to enrich in your lifetime, not who can give you money. And you don't really ever need permission from anyone to build what you believe needs to exist in this world. So, take that away and always be kind to yourself and really celebrate the small wins, I'd say, as well.
Well, I think this has been an awesome panel. 3 very different kind of personalities and businesses, but all kind of coming to the same kind of general conclusion, which is like, you just have to believe in yourself. Don't give up. Forget about all the haters. And at the end of the day, like, it's really wonderful, like when you get the article in TechCrunch or Sifted or on the cover of a magazine, in your case, Grace, and everyone's like, oh my God, life looks wonderful. But the real version of how you got there is a lot less sexy, and it's a lot more about kind of grit and determination. So I think that thank you for sharing those kind of like real world stories with everyone else. I think a lot of founders just kind of only see the magazine covers and they just kind of get disappointed and start to doubt themselves. And only by hearing from the stories of people who've done it successfully can they realize they're not freaks, they're just entrepreneurs. So thank you for that. And thanks. Have a good evening, those of you that are in the UK, and have a good afternoon, those of you that are in the East Coast. And to everyone else who's listening, thank you for spending the time with us. I think, again, this was a great panel. And download FounderTribes. We just did our beta version, so we would love for you to get your feedback and love to help you access mentors and investors so that you can become some of these success cases like the guys and women on the panel today. So thanks very much.
Thank you, Gary.
Thank you, Gary.
We live in a world where 99.9% of the world's 600 million entrepreneurs are treated like roadkill. They might not be from the right race, or they might not be from the right gender, or maybe they don't live in the right postcode, or might not have attended the right school. And because they don't sound or look the part, they will never get access to the feedback, networks, and capital they need to start up and scale up their businesses. Talent is distributed evenly, but opportunity is not. FounderTribes exists to change that. Our mobile app uses machine learning to match founders with the investors, mentors, and educational support that they need. We're like Tinder, but for founders. It all begins with a founder submitting a pitch that will be evaluated by a community of entrepreneurs and investors relevant to their vertical and stage. Each founder gets qualified feedback about the weakest areas of their business plan, as articulated in their pitch. They are evaluated according to the 10 elements of a business plan as per Sequoia Capital's evaluation system. There are two possible outcomes. If a founder is deemed investable, they will automatically be matched with investors appropriate for their stage and vertical. A founder can also choose to see investors who have made the hire or set the wire in the past, meaning investors with a track record of investing in or hiring people of backgrounds similar to the founders. If a founder is not deemed investable, they will be offered a personalized selection of video tips from world-class founders relating to their areas of weakness. They will also be matched with expert mentors to work through their risk factors. When the founder is finally deemed investable by their mentor and the community, they will then be introduced to the relevant investors for them with an optimized chance of success. Our database includes 18,000 angels, 3,000 venture capitalists, and 5,000 mentors. Our world-class content comes from such gurus as Stacey Abrams, Steve Blank, Jen Wang, and Anne Wojcicki. We have distribution deals on 4 continents, including with the City of New York, London and Partners, Silicon Valley Bank, Capital Enterprise, and Unicaf. We have also raised $1.2 million from British investors such as Velocity Capital Advisors and Chris Topman, and American unicorn founders such as Sander Daniels, the founder of Thumbtack, which has raised $436 million from Sequoia Capital and Google, Zach Bookman, the founder of OpenGov, who has raised $140 million from investors including Andreessen Horowitz, and Dana Wagner, Chief Legal Officer at Impossible Foods, which has raised $1.5 billion from investors including Serena Williams, Katy Perry, and Jay-Z. If software is eating the world, it's time for the startup ecosystem itself to be disrupted. It's no longer acceptable to relegate and ignore 99.9% of founders. FounderTribes uses machine learning to empower millions of entrepreneurs around the world, regardless of what they look like or where they come from. We hope that you will join us. Please download the app today.